Yeah, baby. Yeah, baby. Let's go, baby. Let's go. Shout out to each and every one of you for being here, sharing your most precious asset with me, and that is your time. Welcome to the Crypto Lifer Show, baby. Samuel Price, every single day. Sammy, Cup and Handy. Samuel, Cup and Handle. You call it, we name it. We got you. Shout out to each and every one of you jumping on into the live. Thank you for being here. And we got some big news to bring you. A lot of stuff brewing. Gonna break down the charts for you real quick. No eat, no pay, baby. No eat, no pay. Shout out to each and every one of you. Appreciate each and every one of you for jumping on into the live. So look, real quick, everyone wants to know what's up with Bitcoin. Well, we traded it beautifully last night in the trading group. If you were with me or anyone else, we talked about a bounce. We had hidden bullish divergence on Bitcoin. We're going to break it down for you as well on the 4-hour time frame. Highly likely. Just posted this to my trading group. Price will touch the 21-day moving average. Likely get a boom to the upside unless it breaks back inside this pattern. Then we'll have something to worry about. I want to make sure that Bitcoin does not get back inside this diagonal trend line. And look, that's a cup and handle right there. That would be a cup. There would be your handle. Sammy, Cup and Handy. We're going to wait for those stochastics to reset. RSI is a little high, but the last time it got this high, it was right there. And we had a massive move to the upside, even though we went down on the RSI. That tells you when you reset on the RSI, let me show you something. Here's your low on the last RSI, kind of right here, and even right there. When you reset, you come up and you reset back down to your that's the lowest we've been was right there, and you have a higher high, a higher low, high likely you're going to make a higher high. The trend has already been established through the RSI. Most people can't see it, but we already know what's going down, right? Shout out to each and every one of you for being here, sharing your most precious asset with me, and that is your time. Got to configure this video. It always does too high on the contrast. Sharpness, let's bring up the saturation. And what we're also going to do is hit the camera control, and we're going to lower that exposure. What that's going to do is let you see the magic box the right way. All right. There you go. There you go. That thing is a hypercube. Still waiting for my affiliate link. I don't know what they're doing. They have an affiliate thing. It doesn't seem to be working. I don't know what's going on. We also have Gary Gensler getting grilled. I got to see this with my own eyes. I can't not see this. So let's jump on into Gary getting grilled. All right. And then we're going to jump into Bitcoin too. But this is just, I got to see this.
I couldn't help but stop by the statue of Sam Rayburn, longest serving speaker of this great house. His colleagues
look at him shaking.
Call him Mr. Sam. Well, you see, as chair of the House Committee on Interstate and Foreign Commerce, he worked closely with President Roosevelt to establish the nation's first federal securities laws.
I don't trust anyone that says Roosevelt.
Fact,
it's Roosevelt.
It was called the Fletcher-Rayburn.
It's Roosevelt. Everybody knows that.
Rayburn and Roosevelt were motivated by the lack of market integrity and disclosure. The markets were rife with fraud and manipulation, and they knew that market integrity and disclosure help protect investors.
He looks like Voldemort.
Builds trust in our capital markets, and yes, lowers cost of capital for issuers. This foundational work has been part of our nation's economic success.
Look, he can barely touch the. Look at that. What is that?
Standing ever
Look at his finger, dude.
But we can't take it.
That's
for
strange.
granted. Congress built on Rayburn's work in the 70s,
it's a bit
again
weird.
in the 90s, to mandate that our agency also consider efficiency and competition as well as
Thank you so much for the donation. God bless you.
In formulating our rules. As amended, this led to our often stated three-part mission around protecting investors, promoting fair, orderly.
If you're watching the stream but you got your phone on you, hit the QR code with your phone. You can get right into the trading group immediately.
Markets serve investors and issuers alike, but not the other way around. Investors and issuers don't serve the markets. It's about the issuers and investors. And much of our work is basically focused on the middle, the markets, driving efficiency, integrity, and resiliency in the market. And with regard to efficiency and competition, we have multiple projects, including, as further detailed in my written testimony, around equity markets and private funds. As relates to integrity and disclosure, we also have multiple initiatives. The technology that I think is most transformative in our time is artificial intelligence. It's not crypto, as much as we're going to discuss crypto here today. And that's why I think that we've got to have some projects in that area around robo-advising and brokerage apps and the conflicts that may be in predictive data analytics. But as to crypto, which I know will come up, simply put, investors in the crypto market should benefit from the compliance with the same laws that Rayburn and Roosevelt laid out. It's the law. It's really not a choice. As to disclosure, the SEC, as designed by Rayburn and Roosevelt, is merit neutral. But we do have an important role with regard to ensuring for full, fair, and truthful disclosure about material risk, and thus we have disclosure projects including regarding climate risk, cyber risk, stock buybacks. And lastly, as to financial resiliency, lest we forget, risk in one corner of the market can spill out and hurt regular folks. 8 million Americans lost their jobs, millions of families lost their homes, and yes, small businesses shuttered after the '08 crisis. Recent market events are just the most recent reminder of this. That's why we have a number of projects around our U.S. Treasury markets, around investment funds, and private funds. In summary, much of our work is about making the markets more efficient, more fair, more resilient for the benefit of investors and issuers. We greatly benefit from public input and use it to make adjustments that staff and ultimately the commission think appropriate. Coincidentally, my dad was also sometimes called Mr. Sam. First of his family born in this country.
What all?
And he ran a small business, never went to college, small business, a vending machine business, and the bar owners would call him Mr. Sam. I think my dad, he was never a public figure. I can't believe I'm saying in the same words Sam Rayburn and Sam GENSLER. But he was a big believer in this system of democracy that we have, even things that we're going to go through today in this hearing. But he was a believer that the American system could help him as a small business owner and as an investor, the little bits of money he put to the side. So I hope that both Mr. Sams would think about the SEC's work to ensure that the markets serve investors and issuers alike, but not the other way around. It's not that the investors and issuers serve the markets or the market intermediaries in the middle. I thank you. I yield back my time.
Well, thank you, Chair Gensler. I'll now recognize myself for 5 minutes. Ether is one of the most popular digital assets and powers the Ethereum blockchain.
ETH.
Back in 2018, then SEC Corporation Finance Director Bill Hinman stated that he believed Ether was not a security. Last month, CFTC Chair Benham expressed his view that Ether is a commodity. The State Attorney General of New York asserted in a court filing last month that Ether is a security. Clearly, an asset cannot be both a commodity and a security. Do you agree?
Actually, all securities
Answer the question.
are commodity under the
What are the
Commodity
yes or no?
Exchange Act. It's that we are excluded commodities, but I would agree that a security cannot be also an excluded commodity and an included commodity. I'm sorry, Chair, just to talk about the Commodity Exchange Act more precisely.
Okay, so do you recognize, how would you categorize Ether then?
Look, I think that the general sweep of what Congress did, not just in the 30s, but as amended.
I'm asking you,
years,
sitting in your chair now, to make an assessment under the laws as exist. Is Ether a commodity or a security?
Without speaking to any one.
I know you've repeatedly said that you're not going to speak to one, except you've spoken to one, Bitcoin. So I'm asking you to speak to a second one, the second largest market cap here.
And speaking to the tokens, there's 10 to 12,000. If there's a group of entrepreneurs in the
I'm asking
middle,
about one.
The public is anticipating a profit based on the.
I'm asking you a specific question, Chair Gensler.
Answer the
I
question,
said this in
man.
private. This should be no shock to you. I'm asking this question. Is Ether a commodity or a security?
And again, it depends on the facts and the law.
He won't answer the question. This is insane. This man is insane.
And the judgment you
I
are
can't
making.
take it. It's so crazy.
So, Mr. Chair, I think you
Come on,
would
man.
not want me to prejudge because I'm also.
But you have prejudged.
Answer
on
the
this.
question.
You've
Answer
taken
the
50 enforcement
question.
actions. We're finding out as we go, as you
Answer
file suit.
the question.
People get Wells notices on what is a security.
Please,
in your
stop
view,
doing this.
In your agency's view. I'm asking you a very simple question about the second largest digital asset. What is your view?
And my view is if there's a group of individuals in the middle that the public is
All right, so
anticipating.
let me
All right,
just
so you're
ask
not going
a
to answer
second
the question,
question.
man.
Do
You're
you
just not
think
going
it
to answer
serves
the
the
question.
market for an object to be viewed by the commodities regulator as a commodity,
God
and the
help
securities
us, man.
regulator to be viewed as a security? Do you think that provides safety and soundness for the product? Do you think it provides consumer protection? Do you think it serves the value of innovation? I think no should be a very simple answer for you here.
I think
That uncertainty is bad, is it not?
And I think that Congress has said that there's one agency, the Securities and Exchange Commission, under this committee.
And you won't answer my question, and you're the head of that agency. So give me a break. Come on.
Yes.
I'm answering it in the generic because you would not want me to speak about any one set of facts and circumstance.
Okay, so, but you've already spoken. Have you said anything about Bitcoin?
My predecessors and the agency itself has spoken to them.
Okay,
Yes.
but you're not willing to do the same about Ether.
I think
Okay,
that-
so let me just step back. There's a lack of clarity.
He called it
here
ether.
in the
He
marketplace.
called it ether.
Can you at least agree to that?
I think that the clarity is there. The law is clear.
All
that
right.
There's a group
So
of
let me
individuals you're relying
be
on.
explicit about this. The market doesn't see it. Your regulatory actions and the CFTC's regulatory actions say that there's a great deal of uncertainty here. It is the intention of this committee to fix that uncertainty and actually provide a sound legal basis for this. So let me get into your rulemaking process. So you proposed 53 rules in 2 years. Mary Jo White proposed 23. Jay Clayton proposed 26. At the same time, your agency has consistently provided less comment period than either of your predecessors. Just as one example, when the SEC made significant changes to the U.S. equity markets in 2005 for regulation NMS, the Commission broadly solicited public feedback, held numerous roundtables, issued white papers and concept releases. Fast forward to today, you've proposed 4 equity market structure proposals that would impact millions of retail investors, and you provided a mere 60 days of comments on 1,600 pages of regulations. So let me ask you this. Do shorter comment periods and less public interaction improve rulemaking?
We actually put out the equity market structure rules, had 105 days of comment from the time we voted it out through March 31st. But I think robust public input helps us greatly, and we take comments on our rules. Our average has been about 70-plus days overall. But we also get comments.
And I want to get into the
after
cost-benefit
comment
analysis, but my time has expired. With that, I'll recognize the ranking member.
Thank you very much, Mr. Gensler. I'd like to give you time.
Softball.
To give your
Here comes the softball.
answer.
She's in.
To Mr. McHenry and explain to him exactly how you define securities and commodities. Please go right ahead.
Oh, thank you.
So a security by Congress's will
Maybe this
has
is bipartisan.
about 30-plus terms, and one of those terms is an investment contract. And the Supreme Court has addressed this multiple times over the years, and we as a commission have addressed this in these 100-plus actions that the chair mentioned. I think there's 130
Actions are
or
not
so
how you address
actions
things.
we
You don't
take.
address things by taking people down.
Basically, if the public is putting their hard-earned funds with entrepreneurs, promoters, and anticipating a profit, there's a 4-part test. And it's really, it's a broad sweep. Thurgood Marshall said that Congress painted with a broad brush to protect the public. And the SEC is an agency you all set up years ago, is a disclosure-based agency. We're merit neutral.
Bitcoin
but
dumping
we're
down to
not neutral with
30,160.
full, fair, and truthful disclosure in crypto or elsewhere.
But we're just staying
And
in
that's
this
really
flag.
the
All we want to
core.
do is have this
So
flag
it's,
hang
is
out.
there a group of entrepreneurs in the middle that are working on that project, promoting that project, have a website that the public looks to? Do they have
don't want to break back
Twitter
inside this
accounts and
diagonal trend line.
handles? Do
That would
they,
mean we could come down to the bottom here,
upgrade
29,000.
the software?
As long as
and
we
is
stay
the
above this,
public
we're
sort
fine.
of reading about them, anticipating a profit based. And in fact, is there somebody that's even visiting you and they're hiring lawyers and sending them in to, to talk to us and so forth? Is there something there that the public is anticipating a profit based upon those efforts?
Thank you very much. Chair Gensler, I'd like to ask a few
He
questions
did not.
about crypto.
He did not answer the question.
You've often suggested that we're witnessing mass noncompliance with our securities laws by crypto firms. However, crypto firms often suggest that their coins and activities are different and need a new statutory framework. Do you agree? And does the SEC have the authorities it needs to bring crypto issuers and intermediaries into compliance with the investor protection and market integrity framework built over the past
Oh, yeah, she
90
was
years?
angry over SPF.
Yes, I do believe that we have the authorities.
So we have
need
bipartisan
and
support
laws, to protect the
People on
investor.
both sides of the aisle.
Would you say that one more time?
Yes, I do believe that we have the laws and we have the authorities to oversee the crypto intermediaries, the crypto exchange.
Are you
broker-dealers.
exercising that authority now?
Yes, we are.
Would you describe for this committee how you're doing that? I understand that you have engaged with a number of crypto firms. Is that correct?
We have. We talked to the crypto firms, some tokens to how they can register, but also these platforms. I've been around finance for over 40 years.
Finance.
In one way or the other.
I don't
I've
trust
never
anyone that
seen a
says
field
finance.
that's
It's
so
finance.
non-compliant
It's
with
finance.
laws written by Congress and affirmed over and over by the courts. But this is a largely unfortunate for the investing public, non-compliant field.
Thank you very much. I'm going to move on
Didn't
to a
answer
question
any
about
questions.
deregulating capital markets. As you know, this committee cares about increasing access to capital, particularly for small businesses. I, for example, have worked with Chair McHenry to pass legislation on crowdfunding and other innovative ways for startups and small businesses to raise capital. These are targeted approaches to supporting business growth and creating jobs. Some on the committee suggest, however, that deregulation is needed, but I don't see how deregulating capital markets is good for small business, job creation, innovation, or economic growth. Would you please explain whether or not you believe deregulation is needed?
I think that we.
Someone just said what's the purpose of this. We want to see who's who here.
By the markets.
We want to see who's who
and small businesses
inside of
can raise
Congress
capital
by what they
in a
ask. It's not really
well-regulated
about the
market
answers. We
to
want to see
protect
who's
against
asking the
fraud,
right questions.
manipulation.
We know we're not going to get the answers.
The reason
There's
small
always
business
something to learn.
benefits is
Observe,
because
observe, observe.
It lowers the risk in the markets when you can lower the amount of fraud and manipulation and you promote good transparency.
Thank you very much. My time is almost up, but I just want you to reiterate whether or not you really have the authority to do what is necessary in dealing with the crypto markets. You said it twice, say it a third time, please.
Well, I think we do. We could use more resources, but I do think
He wants
we
$2.4
have
billion.
the authorities.
That's what he asked for.
Have you indicated what resources you need?
We have in congressional testimony to the House Appropriations Committee, and it's included in this testimony as well.
Thank you very much. I yield back the balance of my time.
Why does his
We'll now
eyes look
recognize the
black?
gentleman from Arkansas, Mr. Hill, for 5 minutes, the vice chair.
Thank you, Mr. Chairman. And Mr. Gensler, thank you for coming to be with us today. I want to continue to follow up on Chair McHenry's questioning. I'll attempt to be more successful. In November 2021, the President's Working Group on Financial Markets released its report on stable coins, which recommended that Congress enact legislation to establish a federal prudential framework for stable coins. You remember that report?
I do, sir.
Is the SEC a member of the President's Working Group?
These would be buy-in
we are,
these would be buy-in wicks right here.
And do you believe
Oversold
that,
to 15.
Did you
RSI
support
coming
that
down.
recommendation of the President's Working
Falling
Group?
volume of falling price suggests
I
a
did.
reversal is coming.
And do you think that Congress has been inactive on this topic?
As best I know, Congress is engaged with the administration throughout the 2 years, so. and
You would
we've-
call that active? Yeah. We're looking for that framework, and you support us drafting a regulatory framework for payment stablecoins.
If I could say, when stable coins, I think that it's important to ensure that there's safety and soundness there, and that if this committee and Congress were to address this through legislation to ensure that we don't undermine our $100 trillion capital markets, that we don't inadvertently somehow undermine what money market funds operate in this country, or how other parts of the financial markets. Lastly, that we don't undermine both the CFTC's and SEC's authorities to go after fraud and manipulation, because right now these stable coins are being used in the crypto ecosystem, and I think you really do want that cop in the beat, the SEC on the beat in the crypto ecosystem.
Well, I'm glad to hear you say that you support a regulatory framework, and I think those issues you raise have to be taken into account by the President's Working Group, and I think they have. I mean, I think those are addressed in their reports, and I think that's certainly the focus of hearings, and so I'm glad to hear, and I don't think I'm putting words in your mouth, that you do support Congress attempting to create a regulatory framework for payment stablecoins. Is that fair?
I think with the guardrails of not undermining the $100 trillion capital markets, and remember,
No, I got your checklist. We've got that.
I was just going to, also in the recent events in the markets, one of those stable coins actually had over $3 billion at Silicon Valley Bank.
Understand.
So
Terrible
that
decision by them.
So,
Terrible decision by Silicon Valley Bank. We've already had a hearing on that subject, and I know we'll have some more follow-up on it. Let me ask you about the consolidated audit trail, something that's plagued my existence for the 8 years I've served in Congress. I've already on record not a supporter of the CAT. Has the SEC issued the final rule on the consolidated audit trail to the best of your knowledge?
the rules are in place. We're still working on parts related to filings in front of us on funding and some amendments with regard to data security.
Would it surprise you that some people in the brokerage community weren't aware that the CAT is actually already being collected as of December 31st? And are you aware that that data is already being collected?
We are actually, as a regulatory agency, aware that it's being collected, transaction data is being collected, and we benefit.
I open up along in the 7-minute.
Are you concerned about the encryption of that data?
I open up along in the 7-minute because I see a swing up to swing up here on price action, but I see a swing down. That's hidden bullish divergence. Could get stopped out. I put a stop loss at 30,050. I want to get out at 30,500. That is my profit. That is my stop loss. Just want to make it clear.
If you would, respond in writing about the encryption of that and the protection of anything that would be considered personally identifiable information. Let me turn to a different subject, which is the Treasury market. We have a time right now where the Fed is shrinking its balance sheet and where there's an unprecedented amount of Treasury issue because of the avalanche in spending by the Biden administration. Is the SEC a member of the Interagency Working Group on the Treasury market?
Yes, we are, sir.
And yet you have this proposal, as I read it, that would say that
Happy
people
birthday,
who
Pierre
are
Braun, for $10
buyers
super
of
chat.
Treasuries could somehow be swept up in
God bless you, brother.
dealers. Why are you proposing that someone who might be a dealer, an investor in Treasuries suddenly become a dealer?
It's really under a law Congress passed in the 1980s after a lot of problems in the Treasury markets, but it's focused on parties that are facilitating buying and selling treasuries and making markets in those treasuries in the markets to get them registered, whether they be high-frequency traders or others that are active in the markets.
My time's expired. We'll have to continue this conversation offline. Thank you, Mr. Chairman.
The gentlewoman from New York, Mrs. Velasquez, is now recognized for 5 minutes.
Thank you. Thank you, Mr. Chairman. Chair GENSLER, I, like many people, was outraged by the reports that Silicon Valley and Signature Bank executives were receiving significant bonuses while simultaneously running their banks into the ground. Since becoming chair, can you briefly explain the actions you have taken to address executive compensation issues amongst publicly traded institutions?
Already up
Thank you.
1.5% on the
proud that
trade.
we were
Already
able
up
to,
1.5% on that trade.
Complete 2 mandates from Congress in
1.87% on the trade.
With regard to executive compensation.
Back to
needs be clawed
30,200.
back if it's built upon
Nice entry.
erroneous
Nice entry on the
financials.
hidden bullish
Number
divergence
2,
on the 7-minute.
disclosure about paid for performance. And then also we took up something around how insiders sell their stock and how they do this under the plans. And this was one of the proposals that we adopted last December as well, unanimously. It's about insiders selling their stock.
So in line of that response, as you know, Section 956 of Dodd-Frank requires the SEC and several other agencies to write rules to ban incentive-based executive compensation that encourages inappropriate risk-taking. It has been almost 12 years, 12, since we passed Dodd-Frank, and the SEC, like other required agencies, still hasn't finalized this rule. Wow. So what step has the SEC taken under your leadership to finalize this important rule?
We have initiated discussions with the other 5 agencies. We have to work with the bank regulators and the Federal Home Loan FHFA to do this. But I'm committed to get this done. We have to do it in coordination with the bank regulators.
When? Another 12 years?
No, you're absolutely right. I came into this job 2 years ago. There were 8 mandates from Congress that had not yet been done out of Dodd-Frank. We've completed a number of those, and I'm committed to complete this along with the 4 bank rate agencies and the 1.
Shout out to the 900 people that live. Can I get the likes up to the watchers? I would greatly appreciate it. God bless you all.
Sir, it has been publicly reported that Greg Becker, the disgraced CEO of Silicon Valley Bank, sold $3.5 million.
He sold all that
of
right before it
Silicon
banged down.
Stocks
Come on,
less
man.
than 2 weeks before
Knew
the
exactly
bank's
what he was doing.
collapse, raising question about whether he ran afoul of insider trading laws. What actions has the SEC taken to investigate stock trading by bank executives leading up to the bank's collapse?
If I could step away from any one circumstance and say it's against the law to trade on material non-public information. That's whether you're at a company or whether you're in just a private citizen, that's against the law, and we take that very seriously.
So what action has
Trade's
the
about to hit
SEC
2%. 1 point.
taken
Yep,
under
2%
your
on the trade now.
leadership
2% on the
addressing
trade. That's how you make
trading
2%
generally?
in literally 5 minutes.
Well, over the course of the last 2 years,
You got to have
we've brought
cojones, though, and you got to be able to buy
1,500
divergence.
law enforcement actions, and we could get back to you and give you a list of those related to insider trading, but unfortunately, more than one.
Mr. Gensler, the S-2155 legislation that passed in 2018 contained legislation I authored that extended the 1940 Investment Company Act to Puerto Rico and the other territories. The legislation provided a 3-year phase-in period for enforcement that could be extended for another 3 years at the discretion of the SEC chair. I recently met with several investors from Puerto Rico who informed me the SEC was not enforcing this statute. It has been almost 5 years since this became law. Is the SEC currently enforcing this statute, or has a second extension been granted?
I thank you for raising it. I think it was an important amendment to bring this under the Investment Company Act, Puerto Rico fund companies. And if you're aware of anybody or want to tell us somebody that you think is not in compliance, that would be helpful to us. But we are enforcing all of the laws that are on the books of the SEC.
Well, we need to have a meeting, sir.
I look forward to that.
Thank you.
You're not
The
doing
gentleman
it.
from Texas, Mr. Sessions, is now recognized for 5 minutes.
Mr. Chairman, thank you very much. Mr. Gensler, you started your conversation with this committee with "my views are my own."
Up 3.66% on
Yes,
the
sir.
trade.
Why did you say that?
I nailed 3%
Because it's
over
part
and
of
over
our law
again.
that I
Up
always say that my
3.6%
views are
on the
my
trade.
own.
Up
They don't
4% on the
represent the
trade.
staff or my fellow
Nice pump back to the upside on the hidden bullets divergence with a
they
7-minute
represent the
time frame.
agency?
I'll teach you it in a
I'm
second.
here as the chair of the agency.
At the end of
but
this.
Because I'm a member of a 5-member commission, the commission speaks.
That's how you capture 3% in about
as
10
that
minutes.
commission, and so
I'll teach you
that's
how.
standard language that we
1% of portfolio.
our speeches
Always use a
and
stop
our
loss.
testimonies.
So you don't represent the agency. You cannot speak on behalf of the agency. Why are you here?
As
Wow.
chair of the agency to express the views as the chair of the agency.
Then why didn't you say I express the views as chairman as opposed to my own? I don't understand that. Those are personal. When you say my own, that's personal. Now you're contradicting that and saying as chairman.
Again, because it's written into our,
I think you ought to reevaluate that because I think that's a complete cop-out. I think that's a cop-out that I think we hear, and that's why this committee is going to express its opinion to you today. Mr. Chairman, I'd ask unanimous consent for a letter that I've sent to Mr. Gensler to be entered. into the
Without
record.
objection.
Mr. Gensler, you were kind enough and your staff was kind enough last year to engage me on an issue that I asked for. I asked for us to speak. I asked for us to try and get closer to understanding. You've spoken a couple times today about in regards to the chairman, but perhaps issues about, well, these would not be appropriate in public forums to
Still
talk
holding
about. But almost
3.38%.
every filing that companies make are public filings. They already are public. It already is known. And once again, I find you trying to hide behind things for either a lack of willingness to be candor about it, or you're trying to obfuscate your oath of office, which was well and faithfully. This committee is not happy with
Thank you.
that attitude or performance. I was told by you, after we'd had numerous discussions with your staff, about a company that had a capital formation issue with millions of dollars at risk at the last minute based upon their public filings, that you would not respond at all or even discuss the matter with the company to try and alleviate a problem for the average number of days that it would take your agency to respond. In other words, the agency had to respond. You were simply a placeholder. You have no real responsibility. You have your own views, not the views of the management.
Get those likes up
of
to the watchers.
organization
993 people. This guy's going hard.
Well, I
Sessions.
would say to you today that there's a corollary. You talked about your father. I'm going to talk about my father. And my father, who served as a federal judge for 14 years, became director of the FBI for President Reagan. He recognized that the agency had a problem that probably emanated from the Department of Justice. I'm not going to blame the FBI. I'm not blaming the Department of Justice. I'm saying the circumstance was there, that they would not give credible information or deal with people who they were indicting and charging. And my father changed that and said, if you are, or if you have reputable counsel that stands at the behest of a court, that a court could punish them for incorrect or unlawful behavior, inappropriate or unethical
Up
behavior.
5% on the trade.
If
Up
you
5% on
had
the trade. With 18x
a
leverage.
counsel
1%
who was
of portfolio,
of
always use a
extreme
stop loss.
confidence, then the Bureau
This is
would
not
deal
financial
with you
advice.
even on the most sensitive issues. I will tell you that one of the clients that I referred to you has extremely important and valuable confidence
That's a beautiful
in
entry.
their counsel. And you as an agency have chosen to stonewall, obfuscate, and not do your job. And I've sent you a letter, and I'm asking you to respond back to this committee and to me about whether you're going to look at that when confronted by this committee, because I strenuously believe that you should have some authority and responsibility in that effort. Mr. Chairman, I yield back my time.
The gentleman from California, Mr. Sherman, is now recognized for 5 minutes.
Mr. Chairman, Chair Gensler, I am very pleased with your attitude and your performance, but my views are my own. I'd like to speak for the gentleman from Texas, but he hasn't authorized me to do so. I won't. The chair of the committee says that we ought to have absolute clarity in this issue, and I agree with him. And we can achieve that if the chair will work with me on legislation to say that all intangible investment assets, including all crypto, are securities. That way it would be very clear that investors in crypto get the same protection as investors in stock, bonds, and other intangible assets acquired for an investment purpose. The definition of accredited investor that we have now relates to the wealth of the investor or their income, which may have nothing to do with their sophistication and knowledge. And I look forward to working with others on this committee to have a definition of accredited that discards the idea of wealth and looks instead at knowledge, but also specifies that if you're going to participate in that kind of private placement, you don't put more than 5 or 10% of your assets in any one basket. The definition of an accredited investor we have now is based on wealth levels set in the 1980s, which means they're completely out of date and probably shouldn't be used at all. Mr. Chairman, You said to the banking committee back a couple years ago, to the extent there are securities on these trading platforms, under our laws, they have to register with the commission. So assuming that a particular crypto token is a security, if that's true, is an exchange where that security is traded a securities exchange?
Under the laws, if you meet the definition of an exchange and you have securities on that exchange, yes, you have to come in and comply and register and protect the investing public.
Well, I heard you earlier say that no field in finance is so rampant with noncompliance. If there are those who are not complying with our securities laws, please shut them down as quickly as you possibly can. And I point out that the most famous crypto exchange was FTX. It is now, of course, the most infamous exchange.
Of 5.3% now.
Congress expanded from 500 all the way up to 2,000. The number.
I just taught you how to use hidden bullish divergence on the 7-minute time frame to make 5% in under 20 minutes. 1% of portfolio, always use a stop loss. I'm just saying, just showing you how to use divergences to make money in trading.
Dozens or hundreds of beneficial ownership entities counted as only one if they list the stock in street name. Do you have the authority, and will you move toward a definition of 2,000 that reflects 2,000?
I think you raise a good point, and I've asked staff for recommendations for the Commission's consideration, really to ensure that Congress's will about these numbers, the 2,000 number you reference in the Jobs Act, it really means 2,000, and how to look at, as you say, street name ownership that a broker might hold for hundreds of thousands.
I think you'll find companies calling themselves private that have many, many thousands of beneficial owners, and that's not what the securities law calls for. Companies, when they file their 10Ks every year, they list their risk factors. One risk factor that's increasingly important is the risk of a disruption in the U.S.-China relationship or economic relationship. If investors got explicit information about that, that would protect investors. If companies had to fight for capital by demonstrating their resiliency, their ability to withstand such a breakdown, then our entire country would be more resilient, and Taiwan would be more secure. Can you move forward to be more explicit and clear with companies that they need to disclose the risks to the company and hopefully what they're doing to ameliorate that risk of a possible breakdown in the U.S.-China relationship?
Under current rules, companies need to disclose material risk, and if they have operations and there's material risk related to any geopolitical area, not just the one you mentioned, they're obliged to disclose that.
The gentleman from Oklahoma, Mr. Lucas, is now recognized for 5 minutes.
Thank you, Mr. Chairman. And Mr. Chairman, it's good to see you again.
It's good to see you. If I can call you Mr. Chair as well.
Absolutely. And as I always like to remind my friends here, we spent a great deal of quality time together at your previous posting at the CFTC when I was chairman of the committee. That said, I'd like to begin by focusing on a proposed rule pertaining to security-based swaps. There's a consensus from market participants that
Thank you so much for subscribing to the channel. Appreciate you for doing that. God bless you.
Disseminate large security-based swap positions would deeply harm liquidity, particularly in the credit market. And I'll note, standing up a large position reporting regime for confidential regulatory purposes is sensible. As you know, for example, CFTC has a large position reporting regime for futures, but that information is anonymous and aggregated. In November, I and my Democrat colleagues and Republican colleagues sent a letter from the members of the committee regarding this proposal. We specifically asked that you support an approach that would require confidential reporting, noting the potential harm of putting sensitive position information out on the market. Chairman Gensler, have you carefully considered this bipartisan feedback, and will the SEC amend the proposal to reflect this?
I recall your thoughtful letter and the approach, and we're taking that into consideration. I think the part of the motivation, as I understood it, that Congress put this in the act that you helped write, was not only for the official sector to have some information, the confidential information, but also then some of that information to be also.
Hey, Nagotoshi Sugimoto, do you know how to Google? I love you, bro, but just Google it, man. It's Gary Gensler talking to the Senate hearing here.
Because I think the issues that have been raised are very legitimate. As chairman, as the chairman also discussed, the volume and breadth of SEC rulemaking is of significant concern to me. The implication.
Like, it's a simple Google. You know what I mean? I'm not trying to be rude, but like, I didn't get here and start my own business by getting spoon-fed, you know?
Sectors. The adverse consequences in one sector can bleed over into another, causing lasting economic harm. I'd like to reflect.
Yeah, the internet. What, you want me to explain the internet to?
During the implementation process of Title VII of
Hold my
Dodd-Frank.
hand. This guy's funny.
The CFTC's rulemaking process.
Let's get the likes up to the watchers. 1,000 people on the live. Let's get the likes all the way up.
Which led to
The
proposed
people are here
rules that
together.
were poorly vetted. As a result, the CFTC routinely resorted to last-minute staff guidance and no action letters that were needed to modify new rules that simply weren't always workable. This patchwork approach circumvented the standard rulemaking process.
The guy who said kind of rude, there's probably a reason why your other account was banned.
At this time, many of the proposed rules were required by Dodd-Frank. They were at that time.
No, I got in touch with Crypto Capital Venture. Great guy. We were talking about it a few years ago. I forgot. I would love to reach out. He's a good man.
He is following the same path, some would say flawed path. The proposed rules have a major impact on every asset class under the SEC's jurisdiction, with serious consequences for public companies, investors, retirees. I recommend the SEC take great care to analyze and carefully consider the impact of draft rules. This way you can avoid the rush to fix all of the unintended problems that were created. Thought to consider.
I love everybody here on the channel. Just want you to know, but I like to push you in tough love. I want to make you independent and beautiful. If I just hold your hand your whole life, how are you going to be independent? How are you going to become a multimillionaire or a billionaire? I want to push you to the highest level you've ever been in your life. It may seem harsh, but no, I love you. Tough love is the greatest love you can ever have in your life.
To sort through, it generally takes over a year before we finalize something, and we take these meetings with market participants seriously and consider their thoughts.
I would just note, Mr. Chairman, you've issued twice as many rule proposals in your first 2 years as the SEC chairman, 53, as chairmans Mary Jo White, 23, did, or Jay Clayton, 26, in their first 2 years, while providing 21% less time for public comments. I get the impression from personnel
That's a
across
good math
the
equation
SEC
there,
that
huh?
there are concerns about the high volume and the fast pace of this rulemaking. Let's try and get it right, not get it done in a hurry. With that, I yield back, Mr. Chairman.
Wow. I mean, he looked at the math there.
Gentleman from Massachusetts, Mr. Lynch, is now recognized for 5 minutes.
Mass, baby.
Thank you, Mr. Chairman. Thank you for your good work, Chairman Gensler. I appreciate the energy and the talents that you've put to work on behalf of investors. My friends on the other side of the aisle seem to be bemoaning a lack of regulatory clarity, and then in the same breath, they criticize the SEC's rulemaking efforts, which arguably would provide that clarity that they desire. Chair Gensler, in your
Always bipartisan,
testimony
always throwing
today, you
shots. I don't
mentioned
get
that
it.
There have been over
I don't
130
get it.
enforcement actions.
Let's talk about the
brought
people.
by
Let's not
the
talk about
SEC
your,
against crypto firms that have either engaged in marketing securities without providing the necessary disclosures or failed to submit audited financials or investor protections that would allow investors to actually make a meaningful and informed decision regarding the crypto products or the underlying business. Chair Gensler, based on current law, of those 130 cases, those 130 enforcement actions, how many have you won? How many has the SEC prevailed on?
My man said my ex never understood this. Got her to buy Litecoin at 75 before we split. Tough love is the way. You're the man, dude.
We've won on the Howey analyses, these token issues, 6 or 8 times. We've won on other matters in front of the courts as well. And And so we've been quite successful throughout.
Okay. Am I correct in asserting that in each of those cases went through a regulatory or legal process and/or maybe even judicial appeal, and that actually there are decisions, written decisions on each of those cases, either by an administrator or by a court of law that do provide explicit guidance based on current law to other crypto and stable coin firms to provide clarity and that actually lay out some rules of the road that should, you would think, guide other crypto firms in their action.
You raise a very good point. Every one of them is a vote of a 5-member commission, sometimes run by Jay Clayton, sometimes I'm honored to chair, but always a 5-member commission and always with a written public document, an order, or a charging document.
And there's also a joint statement on crypto asset risk to the banking organizations. That's January 3rd, 2023, which lists 8 key risks associated with crypto assets that banks should be aware of. So there's a fair amount of guidance out there and clarity. It's just not the clarity that the crypto industry wants.
Absolutely. We've also been clear and we've been public as a 5-member commission as with regard to the custody of crypto assets, about the exchange definition in crypto assets. We put some of this also out to public comment, but I agree with you. It's not a matter of lack of clarity. I think this is a field that in the main has built up around non-compliance, and that's their business model. And they have chosen, even though it's not the law, they've chosen to be non-compliant and not provide investors with confidence, protections, and it undermines the $100 trillion capital markets. If there's one field of finance and investors get hurt, then it's going to undermine those small businesses, and everybody else raising money in the capital markets can get hurt by this field of non-compliance.
That's great. One of the things I worry about in this area is that crypto firms...
Anyone who uses the word worry lives in fear.
An amalgam of services that in the...
Anyone who uses the word worry lives in fear. You can't use the word worry. So the second that I hear someone use worry, I know they haven't elevated to a higher level of spirituality.
They have, exchange function, broker-dealer functions, custodial and clearing functions, and lending functions. And we've seen commingling of investor funds. Can you talk about the risks that arise from that structure?
We separate these everywhere else. The New York Stock Exchange is not running a hedge fund trading against the people trading on that New York Stock Exchange. And here we have a field that commingles this and trades against their customers and doesn't give the proper disclosures. And we've brought a number of cases, one settled, one a litigated matter with this regard.
Thank you. Mr. Chairman, I yield back.
The gentleman from Florida, Mr. Posey, is now recognized for 5 minutes.
Thank you very much, Mr. Chairman. Speaking of crypto, commingling of funds, while we're on that subject, prior to the collapse of FTX, did you have any concerns with the company or question if they were breaking any securities laws or harming investors?
I think, if I might, I have had, since I've been in this job, a general concern about the field, and as expressed here today, about the non-compliance of this commingling of these various functions, and that they should come into compliance by separating exchange from broker-dealer, from what you might call a hedge fund function and other functions.
So with those concerns, did you direct your staff to look into FTX?
I want to stay at a little bit higher level, but I directed the staff to look into the crypto intermediaries and a wide range of crypto intermediaries. Yes, sir.
Okay, so what did they find?
Well, we filed an action late last year, a number of actions, which are public actions with regard to Sam Bankman-Fried and FTX that are on our website. But what we found in those actions, as they show, is we allege a number of violations of the securities laws.
Yeah, when did you think FTX was problematic? At what point?
Well, again, we filed these actions in December, and I think we filed follow-up actions in January because it takes time to develop an investigative file, and we follow the facts and the law where they come. But I've given speeches, and I've been clear with many members of this industry that right now they need to come into compliance. We have one goal, is to bring them into compliance and to stop commingling all these functions, stop using customer funds as if they're their own. It's like somebody who's got their hand in the cash register because they say, I want to take some money out of the cash register for the weekend. I'll put it back later.
How
And that's
long
just not proper.
How long after you met with FTX and investigated, and did you notify the public and investors that there was an
Again,
issue?
as we've chatted earlier today, we protect anything we do in our examination function, our investigative function. We protect that information and hold it confidential because it's important for the integrity of any investigation, but also for people's privacy. And often we find that we close investigations without bringing action. So there's a time-tested reason that you, of course, would want us to keep things confidential. So we only make them public when and if we either settle or bring charges.
Sad to hear that. The Inspector General found that your SEC is facing the highest attrition rate in 10 years. You know, how's the attrition rate affected your agency's ability to regulate digital assets?
No, it's a very dedicated workforce. We've moved up to about 6 or 7% attrition. That's consistent with other financial regulators across the U.S. government. I'm really pleased to say that last week the Partnership for Public Service, we went up in the overall rankings. We're now in employee surveys. These are employee surveys done by outsiders. I think we're now 3rd out of 27 mid-sized agencies. But in terms of digital assets, we could certainly use more resources. I mean, it is definitely.
Again with this billion-dollar resource.
There are more things to look at and investigate than we have people on the staff to do.
Thank you. Thank you, Mr. Chairman. I yield back.
The gentleman from Missouri, Mr. Cleaver, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Chairman, thank you for your April letter, which I interpret to be a gentle reminder to Congress that we needed to raise the debt ceiling. And I appreciate the fact that you clearly understand and recognize the importance.
This guy obviously doesn't know what the Federal Reserve is.
We've raised the debt
These people aren't
ceiling,
educated, just so you know, everybody.
78
They're not
separate
fully
times
educated.
since 1968. And both parties, 49 times under Republicans and 29 times under Democrats. It is something we have to do. My first question is, do you think that the mere suggestion that we're not going to deal with the debt ceiling create a problem for us economically? I mean, one of your responsibilities is maintain some level of order in the markets. So what do you think, just a mere suggestion, just a mere threat, what does that do?
It puts a dose of uncertainty into markets, but it becomes particularly problematic the closer one might get to whatever deadline that is. And that's not our jurisdiction, that's others. But, and then if we were to go over said X date, it would really undermine, it would be one heck of a mess in capital markets, that's for sure, but it would undermine the base of our capital markets, U.S. Treasuries, or, you know, the risk-free part of our capital markets.
Why don't you talk about BRICS and the fact that they're doubling the dollar all around the world? Don't want to talk about that, though.
I was here in
Don't want to go over that.
in 2011 when there was a stalemate, we're not going to do anything, and so we ended up, of course, averting the cataclysm, but we still did damage to the economy because the gamesmanship caused us not to address this very serious problem. I guess we have failed once, at least, maybe more, you may have been, to address our obligations. 1812, we didn't have the resources for a period of time. But since then, we've met our obligations. And I'm really maybe obsessed with what could happen if we don't. And you know, it's troublesome to me. I don't think you're probably old enough to remember a movie that came out in 1974 called Blazing Saddles.
Is this guy really using his time for this? This is insane.
It's one of my favorite movies. Should have won the Academy Award.
This is insane. Should have won the Academy Award. It should never be one of his words that he used.
you
What a
may
waste of
remember
his
the
time
scene.
and our time. So
Gene
interesting.
Wilder's just brilliant. But Cleavon Little played the role of a guy named Bart. And at one point in the movie, he is surrounded by people who are ready to lynch him. He takes out his gun and puts it to his own head. And he said, "Get back or I'll shoot." You're probably hesitant to want to say this. Isn't that what Congress is doing right now with the debt ceiling?
This guy doesn't understand what's
Being
happening.
old enough to have seen the movie, I think I learned enough to say it's between Congress and other parts of the administration, the Treasury Department, and the White House. I can just speak to the capital markets piece. On the capital markets piece, we've already seen some small bits. You know, there's certain money market funds and other funds that are being careful about which short-term Treasury bills they buy. But if we were to get close to that X date, your proverbial visual that you just did from the movie from 1974,
Oh, that's going to be mean.
it is likely that we would start to see fraying,
That is going to be mean.
less liquidity in the Treasury markets, which ultimately means higher cost to the.
That has
It
to
is
be.
likely that you know, there's. I can just speak to the capital markets piece. On the capital markets piece, but it'd be one heck of a mess in capital markets. It would hurt the equity markets. It would hurt the rest of the fixed income markets. And it would ripple into the banking system as well, not to mention all the money market funds.
Thank you, Mr. Chairman. I yield back, Mr. Chairman.
Shout out to Miss Teen Crypto
I
in the
like my
house.
colleague.
Shout
I
out to
think we
everybody
need
here on
to
the live.
exchange
Thank you for jumping on in.
A lot of bipartisanship.
Shout out to Billy Bob.
That's true.
Real House Committee.
So with that, we'll go to the gentleman from Missouri, Mr. Lukemeyer, for 5 minutes.
Thank you, Mr. Chairman. Welcome, Chair Gensler. We certainly appreciate you being here today. And when I was talking to some friends of mine yesterday about your appearance, they said, "Oh, the APA director." And we both chuckled about that, but it makes the point that it seems as though your agency has taken on a different mission, that you seem to be pushing an ESG agenda, which is, in my mind, something that's not in the best interest or under your purview of the SEC.
Possible
So I'll let my
double
other
bottom
colleagues
here.
get into that a little bit deeper, but I want to put something on record with regards to that. My first question deals with mortgage insurance linked notes. According to the National Association of Realtors, the average first-time home buyer's down payment is 6%. In an environment of elevated interest rates and home prices, private mortgage insurance can make the difference between a family becoming homeowners or waiting years on the sidelines to amass a 20% down payment. At the same time, private mortgage insurance protects taxpayers by standing in front of credit losses at the GSEs in the event a borrower defaults on low down payment loans. Like other insurers, private mortgage insurers must manage capital positions and risk exposures on an ongoing basis. Mortgage insurers are in fact encouraged by state regulators and FHFA to manage that risk through purchase of traditional
get that short
reinsurance
squeeze
and
back
through
to-
capital market
looks like we
structures
could, but you never know.
such as mortgage insurance linked notes. However, SEC's recent reproposed conflicts of interest rule may unintentionally restrict the ability of private mortgage insurers to utilize mortgage insurance linked notes as a risk management tool because the rule does not define the term synthetic asset-backed securitization. Chair Gensler, as the SEC continues to work on the conflict of interest rule, will you ensure that the final regulation does not cause unintended harm to the residential mortgage market by limiting the ability of mortgage insurers to utilize critical capital and risk management tools like mortgage insurance-linked notes?
This rule proposal is one of those, if I can call it, leftover mandates that Congress had put in place 13 years ago now in Dodd-Frank. So we put out a proposal to do that which Congress said, that if somebody was doing asset securitizations,
Sorry that you lost your home in 2008.
couldn't effectively trade against their
Shout out to
investor
Dingo.
clients, which is something Congress saw happening back in the 2008 crisis. And so we're committed to do that within the law, and obviously to take in the comments that you're talking about and sort through this.
Okay.
As
Obviously,
best
there's
we can.
concerns about that and hope that you'll be able to address those. Okay? Very good. Well, with regards to the banking crisis that we've had recently, I think it's an instructive moment from the standpoint of things that we maybe were not thinking about before. We saw with this crisis where somebody got on social media and within less than 2 days had $42 billion run off the books as a result of a social media tweet and the follow-ups from that. That got me to thinking and concerned, and in fact, this morning, the CEO for Charles Schwab, Paul Bettinger, voiced the same concern that I've been talking about for the last several days, which is about short selling. It would seem to me that if we have a situation where we have a lot of banks that are not very liquid right now, that there's some concerns about, that somebody could play some funny games with our not just the banking industry, but our economy as a whole. It could be somebody trying to make money. It could be a foreign actor who wants to do something different to our economy. So the question becomes, if you want to, so I guess what my question really is two parts. Number one, do you have the ability to stop a short sale problem that arises within the banking industry, for instance, based on its threat to the entire industry?
Both buying a security, going long, it's called, and shorting a security are an important parts of our capital markets and important parts of and are legal. To go both long and to go short, it's a way to express and help capital markets work. And so we facilitate that. What we guard against is people trading on material non-public information, and we guard against people doing manipulative acts in the market. So it's really...
well, my question is very simple. Do you have the authority to keep this abuse from happening, this manipulation from happening for the wrong reasons? Understand that it's part of the market structure, it's part of market investing, but if people are doing this to try and cause a run on the banks, to undermine our economy, undermine the industry for their own profit, or as a foreign actor to do something, do you have the ability to stop that? That's my question.
We most definitely have the authority and the ability to go after fraud and against manipulation in capital markets.
My question, though, do you have the authority to have a across-the-board ban on short selling so you can stop this from happening?
They naked short all the time, fake shares that don't exist.
I don't believe that Congress has given us that authority, sir. We've given authority to deal with individual acts of manipulation and chasing after fraud.
Gentleman's time is expired.
Okay, thank you very much. I'll yield back.
The gentleman from Connecticut, Mr. Himes, recognized for 5 minutes.
Thank you, Mr. Chairman, and welcome, Chairman Gensler. I don't have blazing saddles today, but I've got Lionel Trilling. Lionel Trilling was an American critic, an intellectual who in a book in 1950 called The Liberal Imagination said that American conservatism is not so much about ideas, it is, quote, a series of irritable mental gestures which seek to resemble ideas. That was true in 1950. It's certainly true here today.
Let's get the lights up to the watchers. I would greatly appreciate it.
The head-spinning irony of where you're sitting right now is that
1,100 people on the live. Thank you for jumping on into the live stream.
The FDIC and the Treasury
That's what happens when you work hard every single day of your life
in a
and
hearing
you don't
about
stop.
the
No
crumbling
days off since
Silicon
February of
Valley
2021.
Bank. And to hear the majority at the time, it was all their fault. They had done too little and they'd done it too slowly. Something you might remember as you get accused of doing too much too quickly. I promise you that when something goes wrong under your jurisdiction, you'll be sitting back in that seat having done too little, too slowly. Now, never mind that Silicon Valley had one banker on their board of directors and 0 bankers on their risk management committee. Never mind that the vast majority of their deposits were unguaranteed. Never mind any of that stuff. It was their fault. And I promise you, when something goes wrong under your jurisdiction, you will have done too little, too slowly. You've been accused of not being here. The Republicans have been now in the majority for 100 days. You were here on day 100. Did you receive an invitation from the Republican majority prior to the invitation that brought you here today?
We worked with the chair to come when he wanted me to be here.
Have you said no to a majority invitation to testify?
No, we'll work, and whenever the chair wants me here, I'll be here.
Okay, all right. Having gotten that off my chest, I do have a serious question. I've long been concerned by the fact that an awful lot of our capital markets are migrating to private markets. You mentioned it in your testimony. You point out that the amount of liquidity in the private markets now exceed actually the banking system in size. If you look at public versus private market offerings since 2009, registered offerings are more or less flat since 2010 anyway, and exempt offerings are really skyrocketing. The challenge there, of course, is that individual retail investors, by and large, can't invest in private offerings. I worry that profitability and good deals will migrate to those private offerings that accredited investors and institutional investors, that's a term of art for people with substantial amounts of money, can invest in, and retail investors will be left with an increasingly small set of opportunities to invest in the American capital markets. So with my 2 minutes remaining, Mr. Chair, I think it's fair to consider the possibility that the regulatory structure, which I have long supported around public offerings, creates some arbitrage for issuers versus the exempt market. So I just want to give you 2 minutes to reflect both on the proposals that you've made with respect to market structure, but also overall, big picture, are there things that we can be doing along the lines of the Jobs Act or anything else that would hopefully reduce some of this arbitrage between the public and private equity markets?
Let me start by, I think that the American economy has benefited both by vibrant, robust public markets and private capital markets. My dad never had to tap the private capital markets of like today, but he ran a small business with 30 or 40 employees, and he didn't tap the public markets. I was at Goldman Sachs for many years before it was a public company, and I was a big company that tapped only private markets. So
there's still a hidden bullish divergence on
have a
Bitcoin. See,
role to
swing up to
play.
swing up, swing down to swing down. This is called hidden bullish divergence. 9 out of 10 times, you will make a high higher than this high to the
in
upside.
the asset management.
But hey, what do I know?
Private
I'm just a guy that looks at the charts
capital
every day of my
business.
life.
20, 25
I may have stayed at a
trillion
Holiday Inn last
dollars
night.
of assets under management by hedge funds and private equity and the like, and through greater transparency of their fees, their performance, and their side letters where they might be, having different deals. And this is really going to help the retirees in all of your states, because most of your states are invested in private equity and in hedge funds as the limited partners. It helps the state treasurers, it helps the endowments, it helps the people behind that if we can bring greater competition in a field that probably has, at just 2%, it would be $500 billion a year in revenues to the asset managers. This is what I meant earlier. It's important that our capital markets work for investors and issuers, not the middle. Maybe.
Just in. As he's saying, there's clarity. Coinbase to consider leaving the U.S. if regulatory clarity doesn't emerge.
We'll now go to the gentleman
So
from
he's
Michigan,
clearly
Mr.
saying there is
Heisinger
no
for 5
regulatory. What?
minutes.
So is Brian Armstrong lying?
Thank you, Mr.
Or is this
Chair,
dude lying?
and,
Someone has to be lying.
I'm glad
Which
to
one
see
is
you
it?
here, Chair Gensler.
Which one is it?
And I do want to congratulate you on finally appointing a permanent Inspector General yesterday. A little late coming, in my opinion, but in late February, I'm going to jump right in. In late February, Chairman McHenry, Senator Scott, and I sent you a request of documents and information on your climate disclosure rule. The fact is, other than a couple of emails that were private, you have produced only publicly available documents in response to that request. I'm going to highlight a couple of those. You sent us a copy of the public comment file on the rule. You sent us a copy of the rule itself, twice. You sent a copy of your testimony the last time you appeared before this committee. You sent us a copy of your public calendar. You sent us copies of public speeches, testimony, and press releases from you and your fellow commissioners. You sent us a copy of a public FSOC report from 2021. And the most interesting and frankly dumbest example of this that we received to date is a copy of a letter that myself and Chairman McHenry sent you congratulating you as being confirmed as chair in 2021. I have that one in my file already. So frankly, it's insufficient and frankly unacceptable what has been going on. I think it's an embarrassment to you and to your team that you sent me a copy of the letter I sent you and then tried to call that responsive. That doesn't really make a whole lot of sense. And further, your response letter to the chairman and myself, the SEC staff admitted that the proposed rule, quote, could increase costs, quote, close quote,
bada boom, bada bing,
related to energy prices under certain circumstances, but you provided no analysis, the actual information that we were looking for, not my letter to you congratulating you as becoming chair. We wanted the analysis on how the commission determined that. Did the SEC conduct an analysis of how this new climate disclosure regime could change energy prices before publishing the proposal?
We, under the law, focus on the costs and benefits.
Did you produce an analysis? Did you conduct an analysis?
The analysis that we put out is in the proposal we put out last year about the
1,156 people alive. Let's get the likes up to the watchers. 1,000 likes. Let's go.
It looks like
every single day we're here for you. No days off.
Mostly on public comments to form your cost-benefit analysis.
I just want to make sure for the record, we did an analysis with regard to the cost. It's technically the efficiency, competition, and capital formation analysis that we put, and it's out there in the public domain, and we've gotten feedback on that. We're not a climate regulator.
So, well, amen to that.
I mean,
we understand
agree on that,
so did you rely on any internal economic data or assessment to inform your cost-benefit analysis? In other words, did you, the SEC, perform any of that cost-benefit analysis internally?
So the
comments
SEC
are so
looked
funny.
at, I think, over 6,000 public
So that's a yes?
registration statements. Yes, there's a lot of analysis, and that is summarized and put out to public comment.
All right, and I would like to see those documents provided immediately. Are you willing to do that then?
I'm a firm believer in congressional oversight. I know that I'm not.
Okay, well, that was previously requested, and you sent me a copy of the letter that I sent to you congratulating you. So sounds like we now have an understanding that you're going to actually send us your analysis.
So I know that this.
Yes or no?
Well, I know that our staffs are working with.
We have a minute. Yes or no?
And I believe in congressional oversight, and I know
okay.
our staffs
All right,
are working
moving on,
together.
moving on. I'm taking that as a no. So the climate disclosure request, you like that. You responded to our FTX request solely with publicly available documents. To date, 213 pages of those publicly available documents have produced. And guess what? You didn't give us anything surrounding the charges filed against Sam Bankman-Fried. On April 12, Chair McHenry and I sent you a follow-up letter, and we're led to believe that the staff recommendation memo presented to the commission for a vote on charges against Sam Bankman-Fried exists. Is that true? Is there a memo from the staff recommending to the commission the charges that Sam Bankman-Fried was ultimately charged with?
Under standard practice, our commission receives action memos from the staff on every.
So it does exist?
Long liquidations.
We work on
always use
so
the stop
it does
loss.
exist. Okay, well, you haven't sent that to us. Your staff has frankly told us that it exists, yet you have not sent it.
When we conduct an investigation, we are obliged to keep investigative matters confidential.
So hold on a second. Don't hide behind the DOJ, because then it sounds like I need to send letters to the DOJ and not to the SEC about the SEC charges. So we'll be following up with this after this. My time has expired.
Response to our questions would be appropriate. We'll
Wow. Wow.
Mrs. Beatty of Ohio for 5 minutes.
Wow. Whoa.
Thank you, Mr. Chairman. Thank you, Ranking Member. And thank you to our witness today, Mr. Gensler. Thank you for also responding to us and taking the time to talk to me about the SEC and meet with our team and being here today. Kind of staying in this same questioning with the climate rule. As you know, and many may know, I'm a former small business owner myself, so I think I know as well, if not better, than most of the unique challenges that small businesses might have.
I'm a small business owner.
As well
I know exactly what you're talking about.
Family farms. With that in mind, I want to ask about the Commission's proposed climate disclosure rule. We've heard many critics, people on the other side.
So you sent me a copy of the letter, right, Stack? Stack, send me that letter, Stack.
This rule on its emissions disclosure, especially Scope 3 emissions requirements, is being burdensome for small businesses and family farms. I've been doing a lot of reading, research, articles on this. So I want to give you a minute or so to chat with us about, is this rule that burdensome to small businesses, or are there actually ways that they've been protected?
So our proposal and our authorities are about public companies, and that's what it speaks to, and really it's just about public companies. We do not place through this proposal, and nor do we intend to have any obligations on non-public companies.
That's 77.
Those small businesses.
That's 77, baby.
Agriculture interests that you might
Thank you
be
for the love. I appreciate
referencing.
you all. God bless you for being here.
Companies currently are making, hundreds and hundreds of companies are making disclosures about greenhouse gas emissions, and some of those are, as you mentioned, about their supply chain.
I thought this was going to be about crypto.
Scope 3. And even in our proposal, we recognized and we said,
yeah, they have to pull the price down to get everyone to short the market.
The obligation's only on the public company. They can make
Saying the 7 minute is about to blast to the upside.
Something that
it's got hidden bullish divergence.
Talking to their shareholders.
If you trade divergences, you don't need to think about anything else. No emotion needed in this.
We got a lot of comments on this
See if we can win this puppy.
That into consideration.
It's been a battle. I'll give you that. It's been a battle.
Our rules, we'll consider making adjustments if appropriate.
Okay, thank you. Let me try to get another question in here. Certainly, as you know, investor protection.
I like the bipartisan. We have Democrats and Republicans both.
And I want to take
both asking for questions
to highlight some of the investors in my home state of Ohio, like teachers and firefighters, police, and other public servants.
Age contour.
Saving for retirement through their state public pension system. These public servants saving for retirement are a part of the constituency the SEC is tasked with protecting through its investor protection mission. Last month, and we've heard, or it's been referenced many times about our SVB hearing, I expressed a concern then about the Ohio State Teachers Retirement System, how it suffered a big loss with some $27 million invested in SVP. What actions has the SEC taken under your leadership to protect these workers, their retirement savings, or what can I go back and tell my constituents?
That's a good question, though.
Well, I think
I like that.
Really, most of our agenda, whether
She's
it's
for the
our
people.
enforcement that we do, ensuring that people follow the law, or our rulemaking, helps protect those retirees.
Look at that beautiful short squeeze about to come in right now.
Comment.
Where's my liquidations?
We're really trying to
no short liquidations yet.
bring
So
greater
strange.
competition and
Let's get that
efficiency
communal volume delta
in the
up.
private funds area, because those retirees are often invested in those private equity and hedge funds. And if we can help through
Thank you so much for the subscription.
transparency
God bless you.
instill greater competition, that could mean lower costs, lower fees to those folks.
I have about 35 seconds. Is there anything you'd like to share with us if I yield my last 30 seconds to you?
Well, if I could just note something about you mentioned your hearing about the recent events in the markets, and I would note there were 3 banks that failed in those handful of days.
DMTR, baby, DMTR, Demetra.
And 2 of those banks, the first and the third that failed, Silvergate and Signature, were engaged in the crypto business. I mean, some would say they were.
Had you just bought into that little dump,
and the third,
you'd be up pretty nicely right now.
Valley Bank, actually, when it failed, you saw this country's the world's second leading stable coin had $3 billion involved there, DPAG. So it's interesting just how this was all had some crypto narrative as well.
And my time is up. Thank you, Mr. Chairman.
The gentlewoman from Missouri, Mrs. Wagner, is now recognized for 5 minutes.
Missouri.
Thank you, Mr. Chairman.
He said the gentleman.
Chair Gensler.
The gentleman,
you
Miss Wagner.
publicly stated that, and I quote, "Our markets are the finest in the world," and that, quote, "retail investors have greater access to markets than at any time in the past."
She looks like my mom.
Yet, despite these statements, which I wholeheartedly agree with, you still released 4 proposals last December: order competition, regulation best X, tick size, rules 605, that completely upend those markets and remake them from top to bottom. There is a strong possibility that these 4 proposals could make equity markets
7 Minute wants the
more
blast on hidden
costly,
bullets
less
diverters.
efficient, and
I'm
overall
staying long.
worse for retail investors.
I'm still long.
Throughout these proposals, the Commission admits over 100 times that it is uncertain of the impacts of the proposal and that it is unable to quantify or, quote, estimate the economic effects of the proposals. This uncertainty means that these proposals will likely make markets worse for retail investors. You may be willing to risk that, but members of Congress who represent these retail investors, as well as American businesses seeking to raise capital in our equity markets, are not, sir. If the SEC's client truly is the American public, as you've said many times before, then I would urge you to reconsider these proposals before putting millions of Americans' hard-earned savings at risk. You've said repeatedly, let me change topics here, that the duty of best execution is too important for only FINRA to have a best execution rule, and that the SEC should have one as well. I'd like a yes or no answer here, sir. Are you aware that there is a process under existing rules for the SEC to amend or change FINRA's rules, which would include its current best execution rule? Yes or no?
Yes, I'm aware we have that authority.
Yes or no? Do you believe FINRA is incapable of maintaining and enforcing an adequate best execution rule?
I think this is an important rule that we should have at the commission level.
Yes or no? Are
public.
they incapable of maintaining and enforcing an adequate best execution rule?
Again, I think we should adopt one at our level as well, and we have it in other
All right,
areas.
reclaim my time. As proposed, it would be duplicative, onerous, and costly for firms to comply with both the SEC
and FINRA.
And now FINRA's best execution regulations at the same time. Chair Gensler, your proposed rule on open-end fund liquidity
Anyone with common sense
would
can see
require
what's going on.
funds to assume a worst-case scenario of a 10% sell-off on the fund when classifying the liquidity of assets. I have spoken with many asset managers who inform me a 10% run would be a magnitude higher than any that they have seen in recent history. One asset manager informed me that the highest run they have seen going back to the crash of '08 was 2%. What historical data did you use to justify the 10%? And is it appropriate for the SEC to require funds to operate in a scenario that is 5 times worse than historical standards?
This was just to define what is highly liquid, middle liquid, and then illiquid. And so it was really a definitional.
What historical data did you use to come up with the 10%?
Again, we lay that out in our
no, you don't.
Proposals, but I'd be glad to follow up.
You don't lay it out at all. Chair Gensler, you have testified before this committee twice that both times I have asked you if you intended to rewrite Regulation Best Interest Reg BI, and you have said no. Is that still the case?
She's going for the small businesses.
That's still the case. It's not on
Do you
our
remain
unified
committed
agenda.
to supporting the continued implementation of Reg BI?
We look to vigorously enforce it.
Do you intend to rewrite Regulation Best Interest Reg BI? You've said no in the past.
Oh, I'm sorry. I misunderstood your question. It's not on our unified agenda.
Great. Chair Gensler, out of the more than 50 rules proposed under your leadership, none appear to directly address capital formation. If you believe that one or more of these proposals directly addresses this crucial issue, please cite which ones and specifically how that standard is met in 10 seconds.
I think that many of them do because it's about issuers and investors. I would just take private funds. If private fund advisors, the general partners, are taking $500 billion of fees a year, if it
My time's
came
expired.
down-
I'd ask you to respond in writing and be very specific to your mandate of protecting the retail investor, capital formation, and small businesses and IPOs. Thank you. I leave it back.
Gentleman from Illinois, Mr. Cass, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Nice to see you, Mr. Chairman. Do you believe that climate change creates significant financial risks to corporations?
I'm sorry, I didn't hear the word in there.
Do you believe that climate change creates financial risk to corporations?
It's really what investors are basing their investment decisions. And what we found in public input is significant number of investors managing tens of trillions of dollars of assets believe that it's important to their investment decisions. That's the standard we're held to.
Well, let me maybe then sort of add a little color. In 2020, as you know, the CFTC said that climate change poses a major risk to the stability of the U.S. financial system. In 2021, FSOC said that climate change is an emerging threat. And recently, the IPCC said that within the range of possible temperature rises, global economic losses could amount to $23 trillion per year. Are these numbers material?
They're significant to the economy, but what's material is that investors in public companies are today making decisions based on climate risk disclosures, and we're trying to bring some consistency to that.
Is it your view that clear disclosures would help investors to hedge those risks?
That is certainly what our comment file, that we've had thousands of investors who have said that to us.
Okay. I'm assuming this is a yes. You're familiar with the term information asymmetry?
Yeah, yes, I am very much so.
Okay. There was a report from Nature Climate Change recently that said that real estate in the United States is estimated to be overvalued by $121 to $237 billion due to unpriced flood risk driven by climate change, with low-income households facing the greatest risk of losing home equity, as was the case in the 2007-2008 housing crisis. Can you speak to how your proposed rule would address that informational asymmetry between folks who are aware that they're overpriced and folks who are not?
I mentioned it about Chair Rayburn and President Roosevelt. They were trying to address information asymmetries, that the public didn't have full, fair, and truthful disclosures from companies accurately describing their risk. That's what we're doing here in this proposed climate risk, is so that the investing public better understands the risk when they buy or sell a security.
Okay. When I'm done here, I'm going to run to the Science Committee, so you'll forgive me if I dump into the science side here a little bit. There was an article in the Washington Post, I think it was just last week actually, that talked about the effect of climate change in coastal communities in the U.S., found that recent hurricanes Michael and Ian were both made much worse by warming oceans. Federal tide gauge data, this number was shocking. In Louisiana, the sea level is 8 inches higher than it was in 2006 when Hurricane Katrina hit. Just since 2006 is 8 inches higher. NOAA has said that they expect 2 feet of additional sea level rise on the Gulf Coast by 2050. So if you buy a home in Pensacola today, it'll be underwater before the mortgage is paid off. I could go on and on. There's data from First Street that there's more than 400,000 properties, more than a third in West Virginia, that are at risk of severe flooding. Is it logical to assume that purely profit-driven companies are going to seek to offload that risk onto less sophisticated players?
Well, public companies, which is the only thing we oversee is the public companies, manage their risk, and this has become an important risk, and it's a risk that investors want to understand how they're managing it, whether, as you say, they're defraying it or offloading it on others, or they're retaining it inside. And that's really,
I will continue the stream once the meeting is over, and we'll get down to brass tacks like we do every single day. The stream will probably go to 1 o'clock.
I asked that question because we know, and the CFTC report actually acknowledged that they said that they have seen that insurers are offloading risk onto Fannie and Freddie disproportionately in flood-prone areas. Given that movement, and given your obligation to protect investors, is it safe to say that your mandate is to protect all investors, not just the sophisticated ones?
It is absolutely correct that it's all investors, whether it's the most sophisticated, the largest, and the smallest, but we're merit neutral, I just want to say. So it's a matter of disclosure-based, disclosing the risk and how those companies are managing those risks.
Well, obviously from my questions, I agree, and you had mentioned $130 trillion of global assets under management that are looking to get into ESG pieces. And as we sit here saying, should we be protecting all investors, or is that just woke? I'm glad to hear you keep pushing this, and I would just urge you, given your mandate at the SEC, to continue to push hard for a strong climate.
The gentleman's time has expired. The gentleman from Kentucky, Mr. Barr, is now recognized for 5 minutes.
Chairman Gensler, I want to discuss Staff Accounting Bulletin 121, which was issued last year by the SEC's Office of Chief Accountant. SAB 121 requires SEC registrants, including banks, to include on their balance sheets crypto assets that are custodied on behalf of their clients. Requiring banks to place custodied digital assets on their balance is a shift, as Chairman Powell recently noted, in historical practice, as custody assets have always been treated as off-balance sheet. SAB 121 changed that, and I'm concerned about the consequences because banks have capital, liquidity, and other prudential requirements that non-bank custodians do not have, meaning that banks cannot offer digital asset custody services at scale without significant balance sheet implications. If banks cannot provide digital asset custody services at scale, they simply will not offer those services, which could lead to market participants not having bank-grade custody solutions to pick from and will turn to offshore solutions, like in the Bahamas, diminishing American competitiveness and compromising investor protection.
Wow.
Chairman Gensler, has it occurred to you the irony that at the
That's what I
same
would do. I would
time
write
you
my thing
pursued
down and
SAB
just read it.
121, which has
So you
effectively
hit your points.
precluded highly regulated banks from offering customers the safety and security of segregated digital asset custody services, not a single one.
You can learn a lot from this. Just look how prepared he was. He wrote it out the night before. Everyone else was kind of winging it. That's the smartest thing you could do.
Commingle customer funds allowed FTX to trade, settle, custody, lend, and borrow digital assets without institutional-grade custody.
I'm actually quite proud of the staff that put out that staff accounting bulletin, because what they said is that public companies, not just banks, but that public companies needed to put on their balance sheet if they had their customer crypto. And it's what we've subsequently found in bankruptcy court, Celsius bankruptcy and others, that in bankruptcy, investors just stand in line.
Well, reclaiming my time, did you or your staff consult with prudential bank regulators? Was there any interagency interaction on SAB 121 before or after this was issued in March of 2022, given the ramifications that this effectively prevents well-regulated banks from providing digital asset custody services?
There was significant dialogue beforehand with accounting professions, the Big Four and others, because this question kept coming up, but there has been consultation about this with the bank regulators subsequently.
Well, I find it very interesting that nobody at the SEC, under your supervision,
Stack is
noticed that
reclaiming his
FTX,
time.
a one-time $32 billion company, was run on QuickBooks. Private funds rulemaking. You have repeatedly stated that increasing competition in the private fund market is one of the primary objectives of your proposal. But last week, the Committee on Capital Markets Regulation issued a competitive analysis of U.S. private equity fund market. Its key findings: concentration is very low and 4 times lower than the concentration of the public mutual fund industry. The number of fund advisors and funds is steadily growing. The range of investment strategies available to investors is increasing at a significant rate. Barriers to entry are low. Effective management fees have been declining. Performance net of fees and portfolio diversification benefits outmatch that of public markets. Demand from investors is growing. This analysis directly refutes the entire basis of your rulemaking, that there is a lack of competition in private equity. Indeed, your proposal will have the exact opposite effect: reduce competition in U.S. private funds markets, including disadvantaging newer and smaller private equity advisors and decreasing the number of investment opportunities available to investors. When you contend there's a need for greater competition in the private funds market, what specific evidence are you relying on?
Just looking at this field and what the limited partners came to the SEC and did various filings with us saying they needed greater transparency about fees, about performance, and about the side letters, and particularly the side letters, because the fund managers are cutting special deals. If I might just say on the earlier point on crypto, if these companies had registered, we'd be able to look at their books and records. But when they don't register, the only tools we have is actually investigative.
Well, reclaiming my time and back to private funds, you know, the United States has only 4.4% of the world's population, but 50% of the capital is raised here. And Europe, by contrast, has the same population, but less than 20% of the capital raised here. The difference between us and Europe, and I want to stay the U.S., not Europe, is that we diversify our markets with private capital being a big driver, making credit easier to obtain for all Americans, making investments in tech, in healthcare, biotech, manufacturing, higher paying jobs. So when you analyze proposals to change our capital markets, don't forget to recognize we've got a much better system than Europe. Let's not be Europe. Yield back.
The gentlewoman from Massachusetts, Ms. Presley, is now recognized for 5 minutes.
Thank you, Chair Gensler, for joining us today for this critical hearing. Although I wish it didn't have to be repeated, I know there are some who deny this fact, so I just want to reaffirm that climate change is real. It is here, and let's be very clear that our constituents' investments, whether it's their personal retirement savings or college savings for their children, are at risk. The good news is the SEC's proposed climate disclosure rule would help protect investors.
Whenever you use fear, she's using fake emotions acting real. You can't use fear to push your agenda.
Although the cheerleaders for big oil want to weaken this rule, the consequences are clear without a comprehensive climate disclosure regimen. We will fail working class people throughout our country, and we will fall far behind our global partners.
I can't,
Chair Gensler, in the, you mentioned earlier that
you guys are killing me in the comment sections.
Oh my God. There were thousands of investors that commented favorably.
Oh my goodness.
Correct? On the proposed rule.
That's correct. I think we've gotten 15,000 comments, and on the investor side, it's almost uniformly supportive.
I'm going to buy an island and just go by myself somewhere, man.
This
is crazy.
Right. They were overwhelmingly favorable. So for those watching at home, I just want to get into the details to better explain why they were so overwhelmingly favorable. There are 3 categories of greenhouse gas emissions. Scope 1 and 2 emissions result from a company's operations. For example, the pollution from a company vehicle or their use of electricity generated from fossil fuels. And then there are Scope 3 emissions, which are the biggest category, making up on average 70 to 80% of a company's carbon footprint. These are resulting from indirect ops, which include the entire business model, including emissions produced by suppliers and also from consumers using the company's product. Big Oil is fighting to get rid of Scope 3 emissions disclosure from the SEC's proposed rule because in a world without transparency, they can gravely misrepresent their exposure to climate risk and rake in millions of dollars. If oil companies like Chevron reduce their Scope 1 emissions by switching to electric vehicles for transportation, and their Scope 2 emissions by installing solar energy at their headquarters, then they could technically claim to be net zero, even if they continued selling fossil fuels as their core product. Chair Gensler, if you were an investor looking at climate transition risk in your portfolio, do you think that looking at an oil company's Scope 1 and 2 emissions alone would give you an accurate picture of your risk exposure?
Well, in my personal portfolio, I'm only allowed to be in index funds, but in terms of or broad-based funds. But what we've learned is many of the comments we received from actual investors have said they would like to have better consistency around this greenhouse gas emissions, including some estimate about their supply chain.
Right, the people want to see Scope 3 disclosures. The European Union and other countries around the world are implementing new disclosure rules that include Scope 3 emissions in the next few years. Now, some argue that reporting is too burdensome, but 70% of U.S. companies will be reporting Scope 1, 2, and 3 emissions within the next few years, regardless of what the SEC does. So let me make it plain. This is
When was
not
the
time
SEC
to
the
backtrack
EPA? I didn't know
and
the
to
SEC
weaken
was the EPA. This
regulations.
is insane.
Now is the time for action and to put people over polluters. Thank you, and I yield.
The gentleman from Texas, Mr. Williams, is now recognized for 5 minutes.
Thank
She
you, Madam
came in,
Chair.
he might have go to the bathroom, so she jumped in.
We've seen a troubling, and I'm from Texas, I need to tell you this, so a lot of this conversation doesn't ring well back where I live, but we've seen a troubling trend with current administration who continues to call for more government regulations and push an anti-growth green agenda.
Annex.
The SEC's
Texas
climate
gonna
risk
annex.
disclosure rule would have
Annex
major
Texas.
consequences for the businesses across the country, especially smaller
Bitcoin's been
entities.
just
who
bubbling
lose
up
out on
today, going back
opportunities
and
because
forth.
they cannot afford the increased compliance costs that come with burdensome regulations like these, and we see this administration continue to put the pressure on small business. An economic analyst of the SEC's climate proposal estimated that compliance associated with these requirements could cost over $100 million for certain companies. This would be detrimental for companies and will stifle innovation and businesses' ability to grow. So what is the SEC's legal authority to enforce these climate-focused regulations, and how does the SEC plan to ensure that its climate disclosure rule does not disproportionately harm smaller entities? I'm a business guy in Texas. I'm a small business, which may lack the resources and expertise to comply with the rule's reporting requirements.
It's a nice
Let me
blue.
take
That's
your
the
second
same blue I
question
just
first.
got.
All right.
Same blue. Nice blue.
Our authorities are just about the public
my birthday.
registrants, these 7,000 or 8,000 companies. And we're not placing any.
Don't use the word need. If you say, I need something, you're telling the universe you don't have, and you're going to get more back of lack. You have to desire it. Exchange need for desire. Okay?
In terms of the authorities, we're staying right with
You don't need anything. All you desire is God's love. You don't need anything else.
the business, putting it out there, the full. and
Let's get this
fair
short squeeze
description,
cooking.
including the
Let's get this
material
short
risk,
squeeze
and
cooking. Look like it's brewing
investors
now.
today
Starting to build a liquidity.
making decisions
About to see a
based
short
on
squeeze. I
climate
can't see we
risk
haven't seen a short
disclosure, so
liquidation
it's
yet.
trying to bring
It's
some
right on time. It's
consistency to
11:50.
that.
What are we
We
doing?
are not a climate regulator,
Okay.
and we're neutral about that.
So following up on this previous question we talked about, is it clear that your climate proposal will undoubtedly impact private companies who cannot shoulder the increased costs that would come with collecting and providing data obligated by this rule? This is not making our public markets more attractive to companies trying to break into the market. And this rule's unnecessary information requirements will subject companies to public scrutiny, investor pressure, and increased regulatory burdens. So this will use valuable company time and costly
Amen. I like how you
resources.
said
And we
that,
see
United
this
States. God
on Main
bless you.
Street with the
God bless you.
regulations that Biden administration has put on businesses. So we'll see it in costly resources that business owners could otherwise be using towards raising capital, growing business operations, quite frankly, hiring people and put people to work. So can you discuss the
people to
impact
work.
that increased
God, put
reporting
people to work.
requirements and the associated costs will have on
I love the
on
Texas accent.
attractiveness of our
I wish I
public
had it,
markets
actually.
and private companies' decision to go public and grow?
I think those public companies.
This is the longest I've ever seen the 7-minute hang
already
this
are
low in the stochastics.
Making
Just like
significant disclosures about climate risk. And I think that what we can do is help bring some consistency, also ensure for those companies that are public that consistency helps them against some that might be making bold claims, what one might call it greenwashing and the like, and help them tell their stories in a consistent way. And as the representative said earlier, Europe also is requiring things. So it will help us be recognized by Europe, hopefully to be that our rules would be recognized by them rather than their more restrictive rules.
Yeah. All this coupled with interest and regulations are killing Main Street American small businesses. Now, by calling on, my last question, by calling on more stringent ESG regime, we are trying to turn the many economists and financial experts at the SEC into environmental scientists who will force companies to adhere to a moving target of climate change goals coming from whichever party controls the White House. As the materiality standard definition continues to be threatened by your agency, I'm concerned that everyday investors will ultimately be hurt by activists who might be the loudest in the room but are not personally invested in many of these companies. So, Chairman, how will you ensure that investors are not going to be pressured and harmed because of activists pushing their agenda into a space where they do not care about any individual security? Can you commit to materiality limitations?
Materiality is a bedrock of our disclosure regimes, and that's in the context of what basically, as the court says, a reasonable investor would find significant in making their investment decisions.
Okay, I yield my time back. Thank you.
Gentleman from Illinois, Mr. Foster, is now recognized for 5 minutes.
Thank you, Madam Chair. Well, first off, I just
This guy's got the best voice ever.
And I do believe that there should be a
we should do books.
proportionality between the number of rulemakings and the number of good ideas. And there's a backlog of good ideas, and many of which you're really following through. I am worried about sort of the overload, both on your staff and on industry participants on this. I think, for example, the economic analysis, when you have multiple rulemakings coming in at once and trying to understand how they'll talk to each other and interact with each other is a complicated thing. And I see a huge merit in pilot programs.
I would listen to this guy's voice all day long.
In regards to
Puts me to bed.
market structures.
So
on
nice.
this. That if you just hived off 10% of the
Let me
markets
just tell you,
and
just
tried your new auctions on those, for example, and see if what to me is the bottom line is the quality of order execution for retail traders. That's pretty close to my economic.
Hey, Lois, I think I'm gonna grow a beard.
Bottom line. And I'd also like to commend you on your approach to 605 in terms of it needs to be updated. And providing retail investors some idea of what kind of quality of order execution they get when they switch to different platforms, I think is the right answer. But I'm a little bit leery about having a new complicated reporting requirement for all the different market participants. There is one entity that has all the necessary data. It's the Consolidated Audit Trail. And running some standard agreed upon open source version of the software on the Consolidated Audit Trail, some lagged version of the Consolidated Audit Trail, I think would get that information in a form that would be digestible. So if you could, I could just have your reaction, first off to pilot programs, and secondly to the technical implementation of measures of execution of order quality.
Yes, a golf commentator.
4 proposals
Up to the
in
left,
December,
down.
and I think that they
Wind blowing,
address
25 miles an hour.
separate important parts of the market in terms of the 2 that you mentioned.
Oh, we're stuck in this falling wedge on the 7-minute. Like,
the
it's
updating
the
of the
longest I've waited for a
23-year-old
7-minute
rules so that
trade to play out.
The retail
crying
public,
aloud.
the individual investors.
It's like
can
dragging
get
its feet
better,
over here.
Information on execution quality, I think is what you call it, 605. I'm glad to hear your
Let's
support
get the short squeeze on. We know it's coming. We know it's coming. We don't know anything.
The auctions that we propose, this order routing rule that we propose, that was really to help individual investors get better execution and get more competition with regard to their execution.
Yeah, but it's not blindingly obvious, at least to me, that they're actually going to get better pricing. You know, this sort of cockamamie system that we have right now does allow a retail investor to sort of raise up his hand and say, look, I'm clueless. Will you give me a good price to trade against me because I'm documented to be clueless? If you understand, the
Well, actually,
low toxicity of their order flow is, I think, the buzzword.
I like to think that the individual investor is pretty smart, but the individual investor is only trading small amounts of stock, and so there's a sweetness in the order, and it's trying to get
That's right, but-
competition for that sweet order because it's small.
Yeah, but right now, your system, as I understand it, might take away his ability to sort of monetize the sweetness of his small, clueless orders.
I actually think, and again, it's only a proposal. We're going to consider all the comments that come in, but it's trying to get even greater competition. It's saying that order could go straight to a lit exchange. That'd be fine. That order, if it can get at least mid-market, half the spread, that would be fine. But if it's less than that and not on a lit market, put it out to some competition.
Yeah, and then so a pilot program would reveal that, is, you know, the main point I'm making, that if you do this, you should see better, you know, hive off 10% of the market, try your auctions, and see if the order execution quality is better. It seems straightforward. I'm a scientist and a big fan of data. You know, nothing is more joyful as a scientist than to prove the theorists wrong. And you have theoretical calculations that should save money, and you should be able to prove it with a pilot program before you expose the whole market to it. Let's see, you sort of touched on crypto, and one of the lessons, it seems like if you're going to prevent wash trades, you need to know the true identity. Some regulator somewhere has to know the true identities behind market participants. And have you found any way in the crypto business to reconcile sort of the crypto libertarian point of view with the absolute necessity to know the true identities to prevent wash trades, or are wash trades the price we pay for crypto?
It's to get the intermediaries, the storefronts, to register, and then we could get the data from those crypto exchanges themselves as to where the buy and sell orders are coming from.
All right.
Gentleman's time's expired. The gentleman from Minnesota, Mr. Emmer, is now recognized for 5 minutes.
Thank you. Chair Gensler, I have a lot of questions in a limited amount of time, so if you could keep your answers to either a yes or a no, that will allow us to get through as many as possible, sir. From your perspective, is it more difficult now for the digital asset industry to access financial products and services in the United States than it was, say, 2 years ago?
Sir, I'm not running one of those businesses. If they came into compliance, I think
Reclaiming my time. The answer, sir, is yes. Do you think you and the SEC have had a role to play in that?
I think we have a role to protect the American investor and the capital markets and the...
Reclaiming my time, sir. You have played an obvious role in that. During your tenure at the SEC, how many rules has the SEC finalized that actually accommodate the existing regulatory framework and are specifically to the digital asset industry so the crypto market can come into compliance?
It's our rule books that are on the books for years, so we have not finalized any new rule.
Why not?
Specifically
it's a new
with
asset
regard to
class.
crypto.
It needs new
We proposed
rules.
some things in best
There's the short
execution.
squeeze about to happen. We're finally breaking through.
Sir, reclaiming my time. The answer is 0.
Tom Emmer, man, goes
And how many
hard.
enforcement actions has the SEC levied against
That's Tommy,
digital
baby.
asset companies?
Let's go,
during your
Tommy!
tenure, sir?
We love you, Tommy!
I think it's probably
That's
40
my
or
man
50.
right there.
The answer, sir, is
That's
about
my
55.
man.
My understanding
Love this
is
guy.
that the biggest crypto failure in history is probably FTX at $9 billion. Were you the chairman of the SEC when FTX collapsed?
Yes.
And how many times did you meet with FTX prior to their collapse?
I think my public record shows 2.
You met it with
please.
FTX at least
15
twice. And arguably,
times.
the second biggest crypto failure in history
I
was
think
Terra
he
Luna.
said.
Who was the chairman of the SEC when
it's getting
Terra Luna
hot.
collapsed, sir?
We had brought...
You were, sir, reclaiming my time. You were. There are 5 members on the commission. Do you believe your speeches and interviews are to serve as the official position of the SEC?
I can only speak for myself when I'm speaking.
Again, sir, in a statement on the SEC website,
you
you are quoted saying, the Kraken staking as a service enforcement action should make clear to the marketplace that staking as a service providers must register. But again, you haven't provided any rules for how that can be done. I must remind you, your public statements are not regulations. It's not responsible to expect the American people to assume your statements are a substitute for rules. Do you agree with this statement regarding the digital asset industry? The SEC needs additional congressional authorities to prevent transactions, products, and platforms from falling between the regulatory cracks.
I think that it's a largely non-compliant field. And
Sir,
we could use
again,
additional
I asked you to comply with my questions, and I'm asking you if you agree with that quote. And I'm going to tell you, I'm quoting you from an August 3rd, 2021 article where you, and I believe you told Congressman Hill earlier that you need congressional authority to regulate stablecoins, and stablecoins happen to be a significant percentage of the crypto market. So the question is, when were you telling the truth? Mr. Hill or to me? You've got to start answering these questions
one has
in a
to be
more
the other, baby.
Transparent
keep
manner.
dancing
sir.
around,
Does it
baby.
concern you,
Let's
by the way, that your
go.
approach to the digital asset
Let's
industry
go.
is actually driving this industry out of the United States?
We're trying to drive it to compliance, and if they're not complying with the laws, then they shouldn't be offering their products.
Reclaiming my time. Madam Chair, I would like to enter into the record this Wall Street Journal article from April 14th, 2023, detailing China's ploy to open its banking system to crypto firms in an effort to seize an opportunity created by our hostile regulatory environment
which, Mr. Chair, you're a big part of.
Without
Look,
objection.
Chair Gensler, FTX was domiciled abroad and so is Binance, yet American consumers still had access to both.
5
You
minutes.
can't really
Let's
think
go.
that
Get as
pushing
much
this
as you can in
industry
there.
abroad is going to protect American consumers when it hasn't several times
Right when he
in
roasted,
the past
the market
on
starts
your
to pump.
watch. You say the crypto market is rife with non-compliance. However, existing SEC rules make no sense for blockchain-based companies, and following them would actually kill these businesses. Your regulatory style lacks flexibility and nuance, and as a result, you've been an incompetent cop on the beat, doing nothing to protect everyday Americans and pushing American firms into the hands of the CCP. Your intention to work against SEC mission and put American investors in harm's
There's a
way
short
has been made
squeeze.
very apparent.
Let's go.
Sir. It's been a year and a half since you've
Let's
appeared
go.
before this committee.
Been
You
waiting
need
for
to
this
answer
all
to
day
Congress
long, baby.
About the issues that
Squeeze
you've
me,
had
baby,
with
squeeze
the
me.
SEC staff
Break out of the
union,
falling
work
wedge.
environment you've cultivated, the
Let's
SEC
go.
that's led to hemorrhaging of senior staff, the intellectual inconsistency of your regulatory treatment towards Bitcoin spot ETFs, and your politicization of capital formation opportunities
Gentleman's time
through your
has
treatment of
expired.
certain SPACs. And that's just to name a few. Thank you. I yield.
Gentleman from New Jersey, Mr. Gottheimer, is now recognized for 5 minutes.
Thank you, Madam Chairwoman, and Ranking Member Waters. Mr. Gensler, thank you for being here today, and thank you for your leadership on many fronts. I'll try to take a breath here, but I have a couple quick questions. I've shared with you my concern with the unusually short-fused, overlapping, rushed, and zone flooding rulemaking under the SEC.
Tom Emmer, baby.
And undermining, my fear that undermines the public's ability to provide thoughtful feedback on the proposals of the Commission
definitely about
and risk
Bitcoin at
stressing an
16.
already tenuous economic climate. The SEC's Inspector
He's been a
General
hot
raised concerns
16.
with this aggressive and rushed approach to rulemaking in a report last October and raised concerns the SEC has staffing issues that may affect the quality of the rulemaking given these short fuses. Some of these proposals are necessary, obviously, to protect investors, and I want to make sure they see their way through and to ensure stability in the financial markets.
Let's
but
go.
I'm concerned that doing it in this manner, it's sometimes hard to tell the impact these rules will have collectively on the economy, on jobs, on certain key
Been waiting for this breakout
job-producing sectors
of the hidden
in my
bullets
state of
divergence.
Jersey and the tri-state area and nationwide.
We will go higher than
since
this
we've
high.
taken the helm of you've taken the helm of the SEC, 27 of the Commission's 53 comment periods have had a highly unusual comment periods, shorter than 45 days from the date the proposal was published in the Federal Register. Considering the delay between when rules are posted on the website and when they are posted in the Federal Register as part of the comment period is not only consistent, it strays from the historical practices of the SEC. These proposals collectively total more than 4,000 pages with more than 2,500 questions to respond to. Last year, it took a letter from 47 members of Congress to get you to extend a 30-day
Emmer,
comment
Elon
period on
Mars,
that
you're funny.
300-page rulemaking with more than 900
Emmer
questions.
Inu.
Many of the proposals put forward by the
Emmer
Commission in the
Inu
last
is
2
the
years
next hot
affect the same
coin.
stakeholders who've repeatedly requested additional time, especially small businesses and other smaller players in the space, to respond to the SEC's often overlapping and rushed comment periods. And I'm concerned that limited stakeholder engagement, especially from small businesses without large regulatory teams to respond, will lead to unintended consequences that will ultimately harm American consumers. Have you at any point been concerned that by moving this hastily, that it could really hurt smaller market participants and their time to provide feedback?
I'm very proud of what we've done. We put out 46 proposals to date. We've reopened some, so that may be why this other number is floating around this hearing. And on average, it's been more than 70 days from the time we voted out, we put it on our website, and we have a formal end to a comment period. But then we get comments after that, and we take meetings after that, and we engage actively with trade associations and market participants.
My only concern there is when, it doesn't actually count when it goes on a website because there's no formal comment period on a website. It's the Federal Register, when it goes to the Federal Register is what the standard is. So
with all respect, people can read it, people can start to do their analysis, they can engage with staff or with their trade association members.
So they can start submitting comments as soon as it goes on the website? Is there a way to do that? Formal comments?
They tell us that they want to have time to read what we do. We put it out. It's very transparent. And we also often consider comments well beyond that period of time and continue to receive comments. So on average, it takes 12 to 15 months from proposal to considering an adoption. And so
but the comment period
very
closes.
transparent.
But the comment period closes during that time, right?
But we continue to have meetings, we continue, and the staff and the commission is able to consider, just like this hearing right here is going to influence me as a decider, a decision maker on that commission.
Thank you. I'm just going to reclaim. Yeah, if I can just come back to this, I'll shift
Sure
gears.
it
Since
is.
2019, I've pushed this committee and financial regulators to create smart guardrails for digital assets. You've repeatedly claimed that most cryptocurrencies are covered by existing securities law, and despite that belief, the Commission has issued little formal guidance to facilitate digital asset firms' compliance with existing rules. The SEC, under your leadership, has largely used enforcement actions to spur compliance. I'm concerned the lack of formal guidance through the normal rulemaking process is spurring even more uncertainty in the space, hurting our global leadership in financial technology and putting consumers at risk and further enabling bad actors. The SEC's advisory committee urged you to solicit comments on federal securities law regulation to crypto assets. Do you plan to take their advice and go through a public rulemaking process that allows regulatory changes in the appropriate manner versus just
We have, Congressman, in a number of areas. The best execution rule that we put out last December includes a whole section on crypto assets, if I might. We're updating our custody rule, and we put out a lot of words and important economic analysis. And last Friday, we did the same on an expanded definition of
Do you feel, before I
exchanges.
lose you, do you feel like you have all that you need from us to all the laws you need to be able to do what you need to do?
Yes,
on
as it
fintech?
relates to crypto assets, and to the earlier question, I do also, though, support Secretary Yellen's initiative about stablecoins.
Thank you so much. I yield back.
The gentleman from Georgia, Mr. Loudermilk, is recognized for 5 minutes.
Loudermilk.
Thank you, Madam Chair. Thank you for being here today. I've got a lot of concerns. I'd like to continue on a little bit in the direction that
Louder milk, baby.
My colleague.
What
from
about
New
quieter
Jersey
milk?
was going on on
My
the
milk is
number
quiet.
of
I can't really hear my milk when I drink it.
and, how you have fast-tracked a lot of these, limiting public comment period. I've heard you say in here that you support congressional oversight, and you respect it, but from what we've seen, your actions are different than what your words are saying.
15-minute wants to pump hard. Hidden bullish on the 15.
Shortcut a lot of
That
the
is hidden bullish, my friends.
administrative
High will be
procedures
higher than this high.
in
I'm going
rulemaking.
for it.
It
I'm
appears
going for this
that
move.
what you're wanting to
Falling
do
volume
is
with falling
hurry
price
things
says a
along
reversal is
before
coming above the point of
Congress
control
can
all the
have
way to
its
the
due
next
oversight.
high volume node and to the value area high. I'm
Excuse
still
me.
in the trade. Let's go, baby.
But
Let's go.
what I want to talk about is something that I have not been in favor of, and I've opposed ever since it was proposed, which is the consolidated audit trail. I know Mr. Hill asked you some questions about that. First of all, I've never been supportive of it, but it's here, and we have to constrain it.
I like the gray
believe
tie.
it's a
I like the gray
violation
tie
of
with
the
the white,
Fourth
yeah.
Amendment, of right to privacy of individual investors. Let me put it in the words of the American Securities Association, and they described it of how the collection
Golden Cross.
of this data violates
Well
the Fourth
said.
Amendment
Golden
right
Cross
to
on top of that.
privacy, because it
Nice.
forces
Look,
every
Lodge is
investor's
divergent.
financial information, personal information, and transaction
Louder Milk
history
Productions.
without any evidence of wrongdoing.
Shout out to Stack. I love you, man.
And I want to quote in a letter that
My
they
milk is
have
quieter
sent
than
to
his.
this committee, both the ranking member and the chairman, is that tracking unsuspected and unsuspecting Americans' every move in hopes of finding unlawful activity is not consistent with the principles undergirding the Constitution, which is true. In fact, a lot of information that we see that regulators are forcing independent financial institutions to divulge about their investors or their bankers or those that do business with them. If law enforcement was trying to derive that information, it would require a search warrant. But yet the federal government will come in and they'll force that information out of these individuals. I spent a lot of time in the military dealing with security, information security. I had 30 years in the information technology sector. What I see in industry is a decentralization of information because of the risk of disclosure. Blockchain, many industries are going to blockchain because you're no longer centralizing it. When it's centralized, there's a one-stop shop for the bad players to come and get information about individuals. So my first question is, what do you believe in this? Is it easier to protect decentralized investor information held by thousands of firms? Or do you feel it's more secure to centralize that in a database administered from Washington, D.C.? Which do you feel is more secure?
There's risk in both sectors. There's risk in the decentralized, there's risk in the centralized. It's really about the appropriate data security in that database. And this is a debate that technologists have quite often. The consolidated audit trail is important to help surveil the market, to oversee the markets. Data was being collected before.
So surveil the markets. So you're looking to use this as surveillance tool of the markets to enforce regulation, or what's the purpose of consolidated audit trail?
To help oversee the markets, to protect against fraud and manipulation, front-running, insider trading. Without any just cause? Or, I mean, are you just randomly going to look? Maybe somebody's doing something wrong here and I've got all this information. But let me tell you, there is no one in the information systems industry that's worth their salt that will tell you it's more secure to have information at one point, one-stop shop. So if I'm a bad guy, I'm a foreign player, I've only got one spot to go to pull all this information. I'm going to put all my investment, all my technology in breaking your security to get that information versus thousands of places that I do not have the resources to do that. Centralizing is a security risk. Now, one of my questions here, will the consolidated audit trail and the case databases collect personal financial information of American retail investors? Are you going to collect information on individuals who are using platforms to invest? Are you going to collect that information? So you're right, there's two databases. The case database will not have individual, their names, their birthdays, and so forth, but it has to have an identifier so that it can be tagged back to what the broker-dealer has. What about consolidated audit?
Gentleman's time expired. Perhaps you can answer Chair Gensler in writing. The gentleman from New York, Mr. Meeks, is now recognized for 5 minutes.
Thank you, Madam Chair. Thank you, Chair Gensler, for coming to testify today. Now, when you appeared before this committee in 2021, I asked you about your commitment to improving the
Pocket score is a little high, man.
diversity
You
disclosures,
it's a little too high.
empowering
Gotta bring it
investors,
down.
and encouraging greater
Mine's a
corporate
little low,
diversity,
so I'll give it to you.
especially within
It's a
America's
little high, though. It's coming out. You want
boardrooms
to
among
you want to
senior
tuck that corner in there.
And you mentioned your focus
Not
at
bad
that
with the
time
road spoof,
on
though. You did
human
okay. You did
capital
okay.
rulemaking, which would include such disclosure improvements.
I like the people behind. It's the best.
And I understand that a proposal should
Just
be
so
coming out
funny.
within the next few months. Now, what concerns me,
go,
however,
Meeks.
is much has happened since 2021,
Shout out to Meeks.
including efforts by some on the extreme right wing, like Florida's Governor Ron DeSantis,
Oh, God.
to politicize diversity, equity, and inclusion efforts and attempt to ignite his own, I guess, presidential campaign. Now we have
Can we just talk about the facts? of the
well-intentioned
SEC right now?
companies in states like Florida trying to make improvements to their policies who find themselves at odds with the leadership of their state. It's also disappointing since there is evidence, strong evidence, that improving corporate diversity can be a bipartisan issue. This should not be a partisan issue. For example, my board diversity bill received the support of 55 of my Republican colleagues right here on the House floor in 2019. So we passed it with the support, a bipartisan support with my Republican colleagues, many of whom sits on this very committee. So given the attempts by Governor DeSantis and others to curtail DEI efforts in academia and corporate America, I have two questions related to your human capital rulemaking. Is the SEC considering how state-level efforts to hamper DEI-related programs could make it harder for companies to comply with more robust human capital disclosures, which we expect from the SEC?
We consider the law, the federal law, but certainly if you have things, and we maybe have staff follow up, if there's something at the state level that you want to flag for us and help us sort through in terms of any of our rulemaking, but particularly with regard to human capital management. But we try to do our best to stay within the law and how the courts interpret our laws.
Yeah, so, what I'm concerned about are there things that the SEC can do in your human capital rulemaking so that you can shield public companies looking to do the right thing with respect to DEI and disclosure from state-based legal challenges, or at least will the SEC seek public comments on this question?
Well, in all of our rulemaking, we seek public comment on our authorities because we want to, of course, stay within our authorities, but our disclosure-based authorities, again, we're merit neutral, and that's because Congress chose that we needed to stay that. But it's the disclosures for investors to best understand the companies they're investing in as it relates to human capital, that they could best understand that most important asset of the company.
And I couldn't agree with you more. And I think that's good policy. That's why it should be bipartisan. And that's why it has been bipartisan previously. So I'm just hoping that states, like what's happening in Florida, doesn't occur or affect what you're trying to do on an equitable basis, just giving investors the information they know. Let me do real quickly. See, I'm running out of time. I know people I want to touch on crypto.
How much did he pay for his shirt?
As you are aware, our regulator in New York, the New York Department of Financial Services, has created a first-in-class BIT licensing regime for virtual currency businesses, which we are very proud of. What I'm afraid of, some are saying that they may take businesses throughout this country abroad and get regulated someplace else. What say you on that?
I say if they're complying with the laws and doing the right by investors, they can be here. But if they're not complying with the laws, investors will get harmed.
I'm out of time.
The gentleman from West Virginia, Mr. Mooney, is now recognized for 5 minutes.
Thank you, Madam Chairman. The Securities and Exchange Commission may be the agency that most directly threatens the livelihoods of West Virginians today. I never imagined I would say that because American presidents are not supposed to so brazenly weaponize the SEC to push through radical climate change policies that they're unable to pass through Congress. When the Obama-Biden war on fossil fuels was first launched in 2009, coal mining gainfully employed nearly 28,000 West Virginians. Today, that number has shrunk to 14,000, a 50% decrease. And the SEC has proposed a crippling climate disclosure rule to mandate all sorts of detailed emissions data for public companies and many non-public companies. The SEC already requires the disclosure of material information to its investors, so let's not kid ourselves and say it's about materiality. SEC Commissioner Hester Peirce put it best when she stated, quote, although styled as a disclosure rule, the goal of this proposal is to direct capital to favored businesses and to advance favored political and social goals. In other words, it's about naming and shaming fossil fuel companies. Some estimates suggest this disclosure rule could cost companies over $100 million to comply. So, Chair Gensler, the SEC Inspector General issued a scathing report saying you were rushing through rules without adequately considering the costs. So can you tell me today how many jobs this climate disclosure rule will cost West Virginia families?
Again, sir, we're not a climate regulator and we're merit neutral. This is about companies are already making disclosures and trying to bring some consistency to that disclosure. That's what it's about, is, with all respect, not about something further than that. In terms of the economics, it's really about ensuring that investors get the benefit of those disclosures. And if they want to go long West Virginia coal, they have the right information long means to purchase companies that are public companies. It's only about public companies. again.
Well, thank you. Despite your assurances, I think it's clear this rule will be devastating to my state of West Virginia. I'd like to submit for the record, Madam Chair, the Inspector General's statement on the SEC's management and performance challenges. Madam Chair, I'd like to submit for the record the Inspector General's statements on the SEC management and performance challenges.
So ordered.
And I would also like
Without
to submit,
objection.
thank you.
East Coast went to lunch.
An op-ed I wrote for the Washington Times.
I'm fasting today,
on the
so no
SEC's
lunch.
climate
Let's just keep
disclosure.
pushing.
Riveting.
Let's keep
Without
pushing.
objection.
Thank you. I do have a couple more questions. Chair Gensler, how many climate scientists does the SEC employ?
We employ economists that are more general economists, so some of them might have some knowledge, but I just think of them as market economists and financial economists.
Okay. Second, another question, and it's the yes or no one. Would you agree that Congress is better suited than the SEC to enact climate policy?
I'd say it more straightforward. We're not a climate policy agency. We're a market regulator, and it's about full and fair and truthful disclosure about public companies.
Okay. Well, we'll go with the yes or no again. Do you yes or no, does the SEC have the legal authority and expertise to enact climate policy?
We have the legal authority to enact rules about disclosure about risk, and climate risk is something investors today are investing in. So it's just about
We're getting into Bitcoin soon. This is almost over.
authorities about
So
disclosure
don't worry.
about
You can come back too if you want.
these material risk in the financial.
You're a lizard,
companies,
Gary. Remember
in
the
companies
bearable
that
bull?
are
You're a
accessing
lizard,
the financial
Gary.
markets.
Okay, but it sounds like you'd agree the SEC doesn't have the legal authority to enact climate policy then.
We're not a climate policy agency. We're a market regulator.
Yeah, do you have a right computer? Is your computer not burning enough fossil fuels while you trade?
regulator in
4,677 views. God bless you all.
Well, I asked
825
because
likes.
this-
Unbelievable.
This rule is designed to choke off capital from politically disfavored sources of energy. Let me be clear in my last 30 seconds. The SEC has no business enacting climate policy, which is exactly what you're doing. No matter what changes are made to this proposed rule, it's rotten to the core and should be rescinded entirely.
Wow.
The SEC and the Biden administration must end its war on fossil fuels.
Here for the laughs, stay for
and
the
return
gains.
to focusing on the needs of investors, not activists.
Chad
Thank you,
tears.
Madam Chair, I yield back.
The gentleman from New York, Mr. Torres, is now recognized for 5 minutes.
Mr. Gensler, there are areas on which we do see eye to eye, like the need to disclose climate change risk or the need to understand the immense implications of the unfolding AI revolution. But I'm going to offer, however, observations about 3 areas about which I've heard concern, and then have you respond as you see fit. First, on the subject of crypto.
Nice purple.
The lesson learned from the collapse of FTX is that companies that bear the characteristics of FTX, offshore, deregulated, over-leveraged companies, have the greatest risk of losing customer funds. In a world of scarce enforcement resources, one would think that the SEC would prioritize enforcement actions against high-risk companies that resemble FTX, offshore, deregulated, over-leveraged companies. Instead, it appears the SEC has done the opposite. Instead of targeting an offshore, deregulated exchange like Binance, you've chosen to target an onshore, regulated exchange like Coinbase. Instead of targeting an offshore, deregulated stablecoin issuer like Tether, you've chosen to target an onshore, regulated
Thank you,
stablecoin
Golden
issuer
God. God bless you.
like Paxos. It seems like your enforcement priorities ignore the lessons learned from the FTX failure. Second, on the subject of equity market structure, if a broker sends a retail order to an exchange, the broker would be in compliance with your proposed rule. But if the broker sends the retail order flow to an off-exchange wholesaler, the broker would be out of compliance with your proposed rule, even if the wholesaler is offering a better price than the exchange. And therein lies what seems to be the perversity of the proposed rule. It strikes me as perverse to tell a broker that you cannot send retail order flow to the wholesaler who is offering a better price and therefore a better execution. On the third subject of private funds, both New York State and New York City retirement systems are heavily invested in private funds.
Hard to trade
The
today.
New York State Common Retirement Fund
chop right
invested
now.
about $29.5 billion in PE, and over the course of 10 years saw an annualized return of 10.12%. The New York State Teachers Retirement System invested $14.7 billion, and over the same period saw 16.6% in annualized returns. The New York City Employees Retirement System invested $6.5 billion, and over the course of 10 years saw an annualized return of 15%. So when I see returns as high as 16.6%, which seem impressive, there's a question that comes to mind: does the SEC risk fixing what ain't broken? So those are 3 observations, and you're free to respond.
I thank you, and let me try to do them in kind.
Try.
In terms of crypto,
Try. I love that. Worst word in the English language.
you're right that U.S. investors are accessing the crypto markets, both onshore companies and offshore. Our jurisdictional reach is to both if they're U.S. investors that are participating in that.
But let's be clear, you have the authority to take enforcement action against offshore deregulated exchanges.
We do.
And stablecoin issuers.
It takes longer to build the investigative files. It takes longer, sometimes in cooperation with offshore enforcement authorities to pursue that. And it is, frankly, more challenging to actually
Thank you, Timmy, 313.
Subpoenas complied with. And so it takes longer in time. In terms of your second area about the efficiency in the capital markets, one area is these individual investors and individual investors placing, as you described, these market orders. And what we did was put out a proposal and said, if that proposal is getting at least the middle of the market, at least mid-part or better, it's fine. But if these individual small dollar orders were not doing that, I
teach class today from 3 to 5:30. If you want to jump on in, it is $99 to find out my 15 years, a special sauce PowerPoint. I'm telling you right now, people don't even believe what you get if you take the class. I'm really giving away my secrets, my trade secrets, everything that I've known, everything that I figured out. I'm giving you a PowerPoint, homework, and more. If you don't take advantage of this, I'm telling you right now, I believe by May, end of May, I will not be doing this class anymore. It'll only be if you could buy a recording of it. I'm running out of time. I don't have the time to do the class anymore. My life is getting way too busy. I would take this class as soon as you can. Ask people in the comment section. This may be one of the last few weeks that I ever teach this class again for the rest of my life. So I would ask people what they got out of it, and it will become a relic in the crypto game.
market on any given day. And the
But what you denounce as the dark markets are outperforming what you consider the gold standard.
well, participating in that.
And you are a
But let's be
guru.
clear, you have
just
the
said that.
authority to take
You're
enforcement
gone. I
action
never want to hear you
against
again in my
offshore
life.
deregulated
I delete
exchanges.
elite
We do.
and
negative people in my life. Yeah,
It
get
takes
them
longer
out.
to build
Get 'em
the
out.
investigative files. It
Get 'em
takes
out.
longer sometimes.
No, I want him
in
removed from the
cooperation
channel, too. I don't want to see that
offshore,
dude again.
Enforcement
he's gone.
authorities
Thank
to
you. Right, peace.
pursue that. And it is, frankly, more challenging to actually get subpoenas complied with. And so it takes longer in time. In terms of your second area about the efficiency in the capital markets, one area is these individual investors and individual investors placing, as you described, these market orders. And what we did was put out a proposal and said, if that proposal is getting at least the middle of the market, at least mid-part or better, it's fine. But if these individual small dollar orders were not doing that, either they're sent to a regulated exchange or put it into competition. But we're going to get feedback on it. And it's one of the 4 rules we put out. It might be the one that I think we've gotten 5,000 plus comments on already.
I just, maybe I'm missing something, because you hold the exchange as the gold standard of competition, but if the wholesaler is offering price improvement relative to the exchange, like, I'm failing to see something.
So one of the things is...
Like, if the wholesaler were offering a worse price, then I would consider that a failure of competition, and I would see the reason for your rule. But if it's offering a better price, are we fixing what ain't broken?
Well, so we don't have a level playing field right now.
Better price for the
between
customer.
The dark markets that are probably a third to a half of the market on any given day, and the
But what you denounce as the dark markets are outperforming what you consider the gold standard.
well,
So that's where I'm confused.
so I'm saying
man.
that
I like this guy. He's sharp on
dark
it.
markets actually have different rules of the road. They don't have the same minimum increment.
I could speak to you for an hour, but
So we're trying to harmonize that. On your last,
Gentleman, time's expired. The chair
Yeah,
now
no
recognizes the
negativity
gentleman from
allowed in
Ohio,
my stream.
Mr.
No
Davidson.
negativity. If you're not
for
talking
5
love, light, and
minutes.
happiness, you will be
Chairman
removed.
Gensler, in advance of today's
We're
hearing,
not with it over here.
did you coordinate acceptable responses with Senator Elizabeth Warren?
No, I'm speaking on my own behalf.
Did you coordinate with Democratic staff? And I ask because it happened before, and I want to be clear whether you
Wow, he goes
operate of
hard.
your own accord or whether there's some sort of coordinated approach to the damage that you're inflicting on America's capital markets.
I'm here as sitting in my role as chair of the agency, but I speak and I get
For myself, he's
remarkable
gonna do this whole thing.
support by SEC staff.
Oh,
All right,
wow.
well, I have a few quick questions
Real weird.
where a yes or no
Such a
answer will
strange answer.
suffice. Chairman Gensler, part of the SEC's mission is to protect investors. Does the SEC review pre-IPO documents?
I think you said pre-IPO documents. You're supposed to, if you're going to take a company public,
Yeah.
the staff of the SEC does review those to see that they're in compliance.
Correct. Is
with the law.
Coinbase a publicly traded company?
I'm sorry?
Is Coinbase publicly traded?
Yes.
All right, so the SEC allowed pension funds and retail investors to invest in a
still live
company,
covering this Gary
Coinbase,
Gensler,
that you apparently,
committee,
from
House
prior
committee hearing.
remarks, believe
going
was
on way
engaging
longer
in
than
illegal
normal, but I'll get
activity.
back to you when I can.
All of their activities were laid out in their public filings in the S1 prior to the IPO. You did say that you believe Coinbase is selling unregistered securities, correct?
Again, I'm not going to speak to any one.
No, but you said that they're selling unregistered securities. This is your public comments.
I think, with all respect, I look forward to you finding that because I'm trying to be very careful. I'm not speaking
We'll help
about
refresh
any
your
one
memory.
company.
In the Kim Kardashian settlement, the SEC stated that Ethereum Max is a security. She reached a settlement for promoting an unregistered security. The unregistered security is Ethereum Max. Have you charged the issuers of Ethereum Max for offering an unregistered security?
We reached a settlement with a celebrity, Ms. Kardashian.
Yeah, but not, she just promoted it. She doesn't operate Ethereum Max. Have you said that Ethereum Max is an unregistered security to the people that offer it?
We did in that settlement, yes, sir.
The vocals. Okay, it's still trading. What about Ethereum? Is Ethereum now a security?
We had this.
I heard your exchange. They've been in place since 2015. You say in your statements that there's clarity in the market and the rules are clear. Just come on in. You can't even answer the question.
Wow.
Do you say XRP is a security?
We're in court and active discussions and litigation on that.
You're in litigation because you do say it's a security. As you know, let's move on a little bit. As you know, qualified custodian banks would effectively be unable to provide crypto asset-related custody as a result of punitive capital impact under accounting provisions in Staff Accounting Bulletin 121. Do you agree that the bulletin should be amended?
I think that the staff addressed an accounting issue and appropriately saw that crypto assets held in custody today are not segregated or not bankruptcy remote in bankruptcy and should be appropriately put on public company financials.
I wish I had time to go into the ESG rule and everything else, but Chairman Gensler, your record of failures to protect investors and abuses of power make it clear that we need to restructure the Securities and Exchange Commission. The failures are many, but let me cite some of the abuses. You average more than 2 rules proposals a month. You provide inappropriately short comment periods. You have unworkable and unlawful ESG disclosure mandates on the market. You have essentially a Hotel California rule for crypto where you can check in anytime you like, but you can never leave. You have endless discovery with no resolution and no clarity for the captives in the market. You have unworkable proposals for overhauling equity market structure, a de facto ban on crypto through proposed custody rule. You have high staff turnover, unhappy people leaving your office, and unhappy companies and capital leaving our country. To correct a long series of abuses, I'm introducing legislation that removes the chairman of the Securities and Exchange Commission and replaces the role with an executive director that reports to the board where all authority would reside. Former chairs of the SEC will be ineligible under my proposed bill. And this isn't just my take. It resonates across the political spectrum. The American people want democratic access to capital, retail investor participation. You can't just exclude retail investors from markets and claim it's for their own good. Our markets need to function and flourish, and I yield back.
Wow.
The gentlewoman from Texas, Ms.
Wow.
Garcia, is now recognized for
Well
5
done.
minutes.
Well done.
Thank you, Mr. Chairman, and thank you, Chair Gensler, for being here today. I know it's been long, and you're probably hungry and maybe thirsty too, but bear with us, we're almost there. As we know, April is Financial Literacy Month, so I would like to begin by touching on the SEC's financial literacy efforts. My home state of Texas consistently ranks concerningly low in financial literacy. The Federal Reserve Bank of Dallas reports that Texas's low financial literacy rates are correlated with poor outcomes on measures like emergency savings, possession of a bank account, and credit score. And even further, in my district, which is 77% Latino, limited English proficiency adds an additional barrier.
Yeah.
Chairman Gensler, I understand that SEC.
Thank you for the $20
holds
in
an
super chats. God
annual
bless you.
Financial literacy and career day for high schools that recently took place. I'd like to commend the SEC for these outreach efforts, and I would also like you to encourage the Commission to strive for more financial literacy outreach work. Can you please provide an update on the SEC's financial literacy outreach efforts and the event that took place
We're
this
still
month?
in this tight channel here, 15 minutes. Still, we still have hidden
It's a
bullets
really
divergence.
important part of our role is to
That is what I'm going
investor
on.
education, and we have an office of investor education that tries to engage in the public, also provide information on
SR
our
flip of
websites so that the
30,050
public
as
can
well,
better
which is interesting.
understand. In addition, also,
trade is
we
flat
take
right now.
in somewhere between
572
2,000 and 4,000
at
tips,
18x
complaints,
leverage,
and referrals
down
per
$2
month
and half a penny.
that the investing
half a
public
cent, you know.
knows to turn
half
to
a
us
percent.
from time to time, as well as state regulators.
It's been a wild ride, though. It's been a wild
when they
ride.
see something and they think
Shop
there's something
City. They're building
amiss with
liquidity to
their,
30,300 on Bookmap,
but it's
looking
a
like the
really
short squeeze is coming.
critical part, and I'm glad to follow up with staff to share more about what we've done in the last month, if I understand your question.
Well, yes, and I would love to see what they may be doing in Texas in particular because of our low financial literacy rate, and of course in my district, particularly when it comes to our Spanish speaking, and as you know, in Texas, we are under mandate for access to the ballot in both English and Spanish, and in Harris County, my home county, it's English, Spanish, Vietnamese, and Chinese, so it's an international population, and certainly we need to make sure that financial literacy efforts are also in those languages. So next, I'd like to turn to the issue of human capital disclosure, a practice that is essential to allow investors to put their money into companies that share their values like fair wages, diversity, inclusion, worker health and safety, and comprehensive benefits. As you recall, you may know that the Republican majority dissolved the Diversity and Inclusion Subcommittee, so it is now up to the full committee to take up these issues as they occur during hearings, especially related to diversity and inclusion. Human capital management is not only essential for employees, but it's also good for business. Good human capital management has shown to increase companies' bottom lines and performance. Employees that are taken care of and are happy just perform better. Chairman Gensler, can you please provide an update on the SEC's efforts to produce more comprehensive rulemaking on human capital disclosures, and why is this type of disclosure so important?
So the staff is still working on recommendations to the full commission. I think it was in 2020, we actually updated the requirements for disclosure, including human capital disclosure. So we wanted to take a close look of how those disclosures looked in 2021 and 2022, and then based upon that, put forward further recommendations. Why they're important, it's really an important asset of many businesses. And I know even when I was young on Wall Street and I was in the Goldman Sachs merger department, if we were selling a company, the buyer would want to know about the turnover, about the compensation, about the benefits, about the employment statistics, because it's a critical asset and it relates to financial performance and the risk somebody's taking as an investor.
When do you expect to get those recommendations?
Again, I like not to prejudge the timing, but the staff is working on it to serve up to our 5-member commission. It's one of the, I think we've, as I said earlier, it's one of the remaining proposals on our unified agenda.
All right, thank you. And I see my time sorted out. I yield back my last 5 seconds.
The gentleman from Tennessee, Mr. Rhodes, is now recognized for 5 minutes.
Thank you, Chairman. I want to follow up on Mr. Himes' comments earlier and congratulate Chairman McHenry on getting you here so quickly in the 118th Congress. Chair Gensler, it's been a while since you've been here and testified before this committee, and I want to know, how did you manage to go more than a whole year and more than half of the 117th Congress without testifying before this committee?
Congressman, I've been in front of this committee under 3 presidents, under 7 or so chairs. I must say, I enjoy being in this committee room and being in front of you, but I don't know. That was up to Chair Waters at the time.
So I'm wondering, when the Democrats were in the majority, did they not reach out to you all of last year about testifying, or did they ask you to testify and you just refused or declined to come?
I stand ready. Whomever's in the chair's seat, I'm stand ready to be here.
Well, it's good to have you here. I want to shift gears a little. It currently costs just $2,000, you might say, for an individual or group of individuals to submit a shareholder proposal, obviously owning a stake in the company. Many companies have millions of investors who will
No, still room to get into the class. Email CryptoLifers.
Considering.
Still room to get into the class. Email CryptoLifers@gmail. You can still read what he's saying while I'm talking. That's why I have the words up there. It's for anyone who's annoyed while I do talk. You can still read the words.
To have their shareholder proposals included on company proxy.
It's called multitasking. You can listen and read at the same time.
Millions of other shareholders.
Shareholder democracy is an important part of the fabric of our capital markets and has been since Rayburn helped write these laws. And so we do take into consideration cost and benefits of the rules.
When you were justifying your decision to roll back the 2020 proxy advisor reforms, you seemed very concerned with the cost borne by proxy firms. Why was that weighted so heavily?
Well, it was only one of the costs, if I recall the analysis, but there were other costs and benefits that were weighed as well. And I think that it really was about
cool statement.
Moving forward, that they
Yahoo Finance only has 3,500. We have 1,000, and they have 1 million subscribers. Dude, this channel is strong.
And investors get to decide.
God bless the lifers. We're going all the way to the moon. That is huge, huge, huge data right there.
In January, I wrote to you and joined by some of my colleagues, Mr. Stile here and Mr.
I'll shut up
Sessions.
now, sorry.
I wrote to you regarding my concerns with the new approach articulated in Staff Legal Bulletin 14L and the unprecedented low rate of shareholder proposals permitted to be excluded by SEC staff during the most recent proxy season. I'll note that you did not respond to this letter. I hope you will do so. Is it common practice for you to miss deadlines and ignore requests from members of this committee?
No, I thank you for reminding me. I will take a close look.
You must have forgot all about that.
I appreciate that. I hope you will. Shift gears again. The SEC's proposed climate change rules
have some respect for
yourself already today, including reporting on so-called Scope 3 financed emissions, which would require financial institutions to collect and report on the emissions activity of their customers, including privately held farms and small businesses, and even state and local municipal governments. Chair Gensler, do you think it is appropriate for the SEC to use disclosure requirements to shape access to capital for American businesses and families, or even local government entities?
Again, we're merit neutral, and the climate risk disclosure rule is only about public companies. It's not about those private non-public companies.
And I heard you say that earlier, but I guess I fail to see how you can't see that if Scope 3 disclosures are required, that those public companies are in fact going to be pressing municipalities, small businesses, small farmers for the information that is necessary for them to comply with the rule that you've proposed.
So if I can address it in two ways. One, our proposal was only that a company that said it was material to them or they were making certain future commitments, they would disclose it, but they can use estimates, they could use frameworks, they could use templates and so forth. But two, we've heard a lot from the public comment period. The public comment period helps us, and I've asked staff to consider how we can look at this to address those comments, whether it's from the farm community or small business communities across America, because we only oversee the 7,000 or 8,000 public companies. It is not a rule about the rest.
Thank you. I hope indeed we see that reflected in whatever emerges. Thank you, and I yield back.
The gentleman from North Carolina, Mr. Nichols, now recognized for 5 minutes.
Thanks so much, Chair Gensler, for being with us today. My staff tells me I'm about the 25th member to ask questions. How are you enjoying your visit here today?
I always love being in front of the House Financial Services Committee.
Well, it's been a while since you've been here, so folks are excited to hear from you.
He was the word love. I'll give him that.
You know, my first question involves a bill I've recently introduced, the Improving Disclosure for Investors Act with Congressman Huizenga, which would make it easier for
Makes me
investors
think of
to receive documents
Huizenga, the coin we've been drinking.
According to a recent survey, a large majority of everyday retail investors, regardless of income or age, prefer e-delivery for its environmental benefits, speed, and convenience. And businesses strongly support e-delivery because it allows them to enhance the quality of their disclosures, improves investor engagement, and reduces cost. Additionally, it's estimated that the industry sends over 27 billion pieces of paper in the mail, which my staff tells me is the equivalent of 2 million trees being cut down every year. Our bill would align the SEC's rules with my constituents' preferences, and I believe this is an issue that industry, the SEC, environmental groups, and Congress can work together on to make life easier for my constituents. You know, I feel pretty good about this bill. I think it's going to pass. I think it's going to get signed by the president. When that happens, you know, number one, what do you think about the bill? Do you know about the bill? And number three, will the SEC prioritize adopting e-delivery?
I look forward to actually looking at the details of the bill, but if passed and the president signs it, certainly we'll implement it according to its law. I would note, many years ago, I helped work in the late Clinton administration on the e-signature bill that then Senator John McCain led work on. So I believe that a lot that was once done in paper can be done electronically.
Thank you so much. You know, Chair Gensler, we share the same goal of making our markets more safe, fair, and equitable. So I'm concerned that dramatic changes to our capital markets, as seen in the proposed rules on equity market structure, could have negative and unforeseen impacts on the working families in my district saving for retirement. I was happy to see the Commission pursue updates to Rule 605 data to modernize data collected from the industry, and applaud you for those efforts. This will certainly improve competition and lower prices. However, since the rules were proposed, several new academic studies have come out with evidence for two of the proposed rules that would do the opposite of what the SEC claims, increasing costs for everyday investors. Without the wholesaler system, these retail investors could lose close to $1 billion per month in additional trading costs. Any increased costs on my constituents looking to save for retirement concerns me. Additionally, I'm concerned that commission-free trading, which my constituents rely on, would go away. Have you considered constituents like mine in North Carolina's 13th district that are saving their hard-earned money for retirement, and how these proposals could increase costs for them?
Absolutely. Your hard-working constituents, I would note, zero commission does not mean zero cost. There's a lot of costs that are elsewhere also in the system. And so the other proposals about that a broker is to have a standard to give you best execution when you place an order, I believed, and we're getting public comment, that's a pretty straightforward standard to get best execution, and your federal securities regulator ought to have that in place, not just the self-regulatory organization. The other proposals are to level the playing field between what's called the lit market and the dark markets, that they have more harmonized rules and they compete for your orders. And then we've proposed something around getting better competition for individual orders of below a certain dollar amount. But absolutely, it's about trying to make the markets more transparent, more competitive for your constituents.
You know, my time is running out here, but I want to thank you for being here with us today. I think it's really important that you engage with the general public, with industry, with a number of different stakeholders in this process. My office is going to be reaching out to you later on about trying to find some ways to get folks together with you in a productive way to engage on these issues. So thank you again for being here, and Mr. Chair, I yield back.
Thank you.
The gentleman from Wisconsin, Mr. Stiles, recognized for 5 minutes.
Thank you very much. Chairman Gensler, the 2013 CFTC Inspector General report raised concerns about your use of personal email to perform official CFTC business. Have you used a personal email address to conduct any SEC business?
No, and if I ever, there are some people that occasionally, over the course of the time, inadvertently send me something, and then I just forward it to the SEC.
So you've not used a personal email address while at the SEC. Have you used multiple email addresses at the SEC to conduct SEC business?
I have 2 SEC emails. They're both on the website, both stored and retained.
Thank you very much. Do any members of your senior team or subject matter experts have digital wallets or own digital assets?
Oh.
I don't believe under our ethics rules they do.
Do you own digital assets or have a digital wallet?
I don't own any crypto assets. All of my securities holdings are actually digital because they're held by a broker-dealer and they're digital there.
Have you ever owned Bitcoin or another digital asset?
No.
And so maybe here, I'm guessing most folks on your senior staff, I'm guessing you included, have bought or sold stocks, but none of them have owned, or none of them currently own crypto assets, but are in the process of making rules and regulations on crypto assets. That'd be a fair assumption?
I couldn't speak to that. I actually at MIT taught a course called Blockchain and Money. I taught multiple courses called Crypto Finance and other courses as well.
But you didn't own any crypto?
No.
You taught the course, but you weren't a user in the product.
So how could you teach the course
I
and
did
not
not
even
own
how could you teach a course if you didn't even use it? Like I teach a course because I use the stuff. Like it doesn't make any sense. What the best question I ever heard. How do you teach something if you never even touched it?
If you've taught a class on it, you've never personally owned.
How do you teach a class on it if you never owned it? How would you know how to teach the class?
The only digital assets I have is my bank account and my brokerage accounts, but no crypto.
Very good, thank you. On July 13th, 2022, the SEC proposed amendments to Rule 14A8, which would make it harder to exclude duplicative proposals. According to a recent analysis, shareholder proposals increased 8% last year, a lot of them ESG related. Do you agree that this proposal will burden shareholders by increasing compliance costs? Yes or no?
I think it will benefit shareholders
But will it
enhance shareholder
But will it
democracy.
increase, the question is, will it increase compliance costs?
We put out to public comment and economic analysis includes both the cost and the benefits.
Understood, but is there a cost associated with that? Is there a compliance cost?
Sir, I'd have to get back to you as to what we put out in that.
Well, I would know.
I believe
that's fine. The proposal acknowledges the fact that it increases compliance costs, and Commissioner Ueda argued in a statement that this proposal is, quote, one more reason for not becoming a public company to begin with. Do you then disagree with your commissioner's comment?
We have lively and good debates, but I do think that shareholder democracy is part of our U.S. capital system.
Understood. I would be concerned about the increasing compliance costs, and that this burden upon burden upon burden is a reason we see fewer companies going to the public markets in the United States. let me shift gears. Last summer, the SEC released a request for comment looking into whether or not index providers should be considered investment advisors. I've not heard this concern or this complaint from anyone. Did anyone come to you and ask you to investigate this issue?
It's a policy initiative that has been in front of the career staff at the SEC for a number of years, and so we thought we should get public input. This was just a request for comment, not a rule proposal.
So understood that it's at that stage, but I think it's concerning where the concern is that some of these fishing expeditions have a substantive and material compliance cost for companies unless there's a substantive risk that you're identifying in this space.
Here's the substantive risk. If you're included or excluded by an index, there is a lot of economic and academic research about what that can affect the stock price or bond price and being in and out of an index. So that being in an index itself is pretty important to those issuers. And so then who are the index creators, providers, and how are they regulated?
Thank you for your feedback. I know I have to yield back. I'd say I also have concerns on your proxy advisor position. Mr. Chairman, I yield back.
Thank you.
The gentlewoman from Colorado, Ms. Pedersen, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and nice to meet you. We've never had the opportunity to say hello. I'm new to Congress. I come from the state legislature, so I'm still not used to how differently committees run. You're gracious in saying that you enjoy being in front of us. But the good news is you're almost done. But thank you so much for being here today and explaining to the public the important role that the SEC plays in ensuring the American financial system remains strong. April is National Financial Literacy Month, and it's something that I know has been highlighted by Congresswoman Beatty and Congresswoman Kim. The theme this year is investing for everyone. This issue was brought to the forefront during the GameStop issue that this committee was heavily involved in nearly 2 years ago. Since that time, we've seen the amount of retail investor participation remain high at 20% relative to the previous 10% a decade ago. And one of the more important purposes of making investing accessible is to build generational wealth. Investment products, many of which are overseen by the SEC, are what comprise many typical Americans' retirement plans. By helping teach individuals the risks and rewards of investing, the SEC can help individuals, particularly from marginalized communities, who can potentially access long-term wealth. Can you talk about some of the successes of the Investing is for Everyone campaign, and also talk about how the SEC is working to educate new investors?
Investor education, as I mentioned earlier, is very important, and we have an Office of Investor Education and reaching out to the public. We also have a really important piece of it beyond investor education. If people see something that they feel that's a problem, tips, complaints, and referrals to come into us and let us know. I know that I also try to use the platform of being a chair and speak to the public, whether it's through social media or other means, to try to take what sometimes is complex issues and make it more digestible for the public.
I was also really impressed with the website and all of the tools and information that's given for the public to be able to utilize. I know that this has been covered extensively, but I do think there are fair points to be made regarding how the different rulemakings could interact with one another and the short time that has been given for public feedback. How can you reassure the public that these changes to the markets will not significantly impact their retirement savings accounts or children's college funds or any other investments that they've made?
Well, I think our whole mission, our whole goal is to help both issuers and investors. And you asked about investors, but it's really about lowering the cost of the markets in the middle and making sure that that market works for them, and then they're not just working for the market. In terms of comment periods, I would note that we put out to public comment reforms of our stock market, and they were out for 3.5 months for comment. We've gotten 3,000 to 6,000 comments on each of these rules. So
price is flat.
That adds up to nearly
My trade's
20,000 comments.
down $1.90. This is just I can't
continue
squeeze
to
a
take comments as they
bone out of this market today.
Great, thank you for that. I know it's a concern that I've heard throughout the financial services community. So we've talked about something that I want to cover, and I'm almost out of time. It goes by quickly.
You just wasted
I
time
want to
saying
discuss
that.
a topic that you've briefly
Just
mentioned
wasted time
in your
telling it goes
testimony
by
and that
quickly.
you
Get to the
have,
point and get it
background
done.
in.
Write it in.
Players in the financial sector have traditionally
She's new,
sought
though.
to
She
use
learns.
advanced technology and analytics to get on the
She's a
edge,
sweetheart.
the cutting edge of their competitors. The rapid growth and expansion of artificial intelligence has the
I'm a
potential
sweetheart.
to
I just wanna make that clear.
revolutionize many sectors of American life, but also bring new challenges.
This guy's playing with his
The
nails.
White
So gross.
House,
I don't want to see that.
in October
Stop
2022,
playing
the
with your
White House
fingernails.
Office of Science and Technology Policy published a blueprint for the AI Bill of Rights, which shared a roadmap for the responsible use of deployment of AI. As the committee has covered, the strength of our
Jeez,
markets are
Birdie.
central to the strength of our country. Bad actors utilize AI, or even a zealous AI system have the potential to disrupt markets in ways
Thank
that
you
we
so
have
much for
not
jumping on
even
in.
fathomed yet. What specifically should Congress consider as we potentially look at developing a regulatory framework for AI?
Thank you for the 50 beats.
I thank you for asking. It's
Yeah, that tie was
much
bugging.
more transformative than anything we've
It was a nice
discussed
tie,
about
nice colors.
crypto, with all respect to that.
And now we have 10 seconds.
But I really think that it's going to bring great progress for the country. We're looking at it as in terms of the conflicts in robo-advising and in brokerage apps and the conflicts that are there, potentially.
The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and Chair Gensler, thank you for being here today. The SEC currently has rules that aim to prevent market participants from trade front-running.
This guy's a
These
nice
rules
guy,
help
man.
to protect retail orders from having the price move against them due to a participant trading ahead of the order and impacting the supply and demand for that security.
Well, they do
Do
it
you
all day,
agree
though.
that such a prohibition plays an important role in helping protect retail investors?
I do think that rules against front-running help individual investors.
Thank you for that. But under the auctions mechanism that the SEC has proposed in December, detailed information regarding the characteristics of a retail order would be publicly announced prior to that order being executed. In practice, this would allow participants to use that information to legally trade ahead of the retail order. I find this astonishing. Do you agree that the ultimate result of the SEC's auctions rule would be legal front-running with prices moving against retail investors?
I understand your point, but I think that actually it could benefit investors and be part of a critical structure. We have auctions in the options market. We've learned from that. Those are, and look to see whether to have something and build on that in the cash markets.
It's a 3-hour
Given your
live
repeated
stream.
statements on the need to
I'm
protect
standing at a
retail
stand-up
investors,
desk.
It is shocking that the SEC
Gotta work out a
would
little
issue
bit.
such a proposal. I believe it's clear that the SEC
This is a marathon.
should not move forward until a proper impact analysis can be conducted.
Might need to go to the
Furthermore, as
bathroom at one
highlighted
point.
earlier by Congressman Lucas, there is substantial evidence to show that the SEC rushed this proposal without considering the real-world impact on the investing public. Moving on to rulemaking, the SEC's recently proposed rule on
Is that a
third-party
spindrift?
vendor due diligence for investment advisors is concerning because it seems that the Commission again failed to consider the real-world impact. The reality is that the broad scope and significant due diligence obligations required as a result of this rule would force many small to medium-sized vendors out of their respective markets and push their clients to a few larger vendors. Many of these businesses don't have the capacity or resources to comply with the unnecessary and overly burdensome obligations. Are you concerned about the potential consolidation that could happen and subsequent risk that consolidation creates if there is an over-reliance on a small number of vendors?
I think we've already seen that in the markets, that there's a great deal of consolidation about outside service providers
But
to
we
the
shouldn't,
investment
we
advisor.
shouldn't facilitate that. That's not good.
So we already live in that ecosystem. What we're trying to do is ensure that the investment advisors relying on those service providers still do their role and comply with the laws and do due diligence on use of those service providers.
I have one final question, and I got to be honest, I don't know how you're going to answer it, so I'm kind of excited. But the fact that I don't know
I'm
how to answer
excited
it,
just
the
listening
fact
to
that I
the
don't know
question.
how you're going to answer it is actually really concerning. So in 2014, Jared Bernstein published an op-ed in the New York Times titled "Dethrone, quote, King Dollar," where Mr. Bernstein advocated for the U.S. government to actively take steps to remove the dollar as the global reserve currency. President Biden has now nominated him to be the head of his Council of Economic Advisors. all while the Chinese are actively undermining the dollar as a global reserve currency, and their successes are increasing both in number and at an ever-increasing rate. So, Chair Gensler, you have been in and out of government for 25 years. As well, you have ample experience on Wall Street. Do you agree with Mr. Bernstein that the U.S. government should take steps to actively remove the dollar as the global reserve currency?
I'm not familiar with the op-ed, but I think that we've benefited as a nation that the U.S. dollar has had such a central role since actually a little over 100 years now.
So no, you do not think that we should actively take steps to remove the dollar as a global reserve currency?
I'm going to go a little further. I think a lot of our agenda at the SEC is about ensuring that we go as many years, as many decades as possible, that we have the best capital markets. And I think the best capital markets undergirds our geopolitical standing and helps our dollar be the leading currency.
We agree. I really appreciate that. It's disappointing that the president is nominating someone that disagrees with both of our positions on this. I guess just real quick, if we do lose the dollar, the cost of import goods will skyrocket because foreign companies will no longer want dollars. We'll lose our ability to borrow at current levels. Inflation will be higher than it already is after spending trillions of dollars we don't have. Interest rates will rise. It'll crush the real estate market. All of that is bad, but even worse, our interest rate on our $32 trillion of debt would go through the roof. President Biden has nominated somebody that thinks that we do not need to have the position we have in the world. Thank you, Mr. Chairman. I yield back.
The gentleman from Nevada, Mr. Horsford, is now recognized for 5 minutes.
Thank you to the chairman and ranking member for your leadership, and thank you to Chair Gensler for appearing before the committee. The sophistication and sheer size of the United States capital markets could not be possible without the competence and information provided by a strong Securities and Exchange Commission. Investor protection is paramount, and it is worth reiterating that as a result of the SEC, you've helped return hundreds of millions of dollars to defrauded Americans each and every year. Your consumer protection efforts go beyond enforcement action to ensuring that every investor has access to the same timely, accurate, and complete information required to participate. So I applaud the Commission's work around facilitating capital formation for U.S. markets, maintaining fairness.
He wrote this last night. He read it like 7 times.
And especially your strong stance on protection
gotta
for
be
Main
perfect.
Street investors. Now, I know that having 3
This guy
pillars
just wants
to
to hear.
your mandate
Some of these people want
can
to hear
also
themselves
create
speak. They just like
tension
their own
between
voice.
different
Like me,
objectives.
you know.
However, I want to urge you to keep in mind that for many of my constituents in Nevada and many all across this country, their main interaction with our vast financial system is through their retirement plans. For example, I commend the vision of consumer protection inherent in your open-end fund liquidity rulemaking, and I also agree that net asset value should be considered as a way to shield general shareholders from ending up on the losing side of a first-mover advantage. However, as I understand it, this proposal would require open-end funds to implement a hard close at 4 p.m. Eastern Time. Upon first glance, this deadline doesn't seem too onerous. However, in Nevada, my constituents, retail investors, often make their investments through intermediaries such as 401k plans and other retirement accounts. These hardworking Nevadans who aren't able to submit their orders directly to the fund would need to submit their orders to their intermediary hours beforehand, potentially as early as noon. So I don't think I have to remind anyone here, but that would mean constituents in my state would miss out on today's price if they can't get their trades in by 9 a.m. Pacific Standard Time. So Chairman Gensler, what would you say to investors who worry that a hard close will lead to a bifurcated market where sophisticated investors will be able to utilize more information and lock in the day's price while others are forced to trade early in the morning? And additionally, do you see ways to mitigate this disadvantage for West Coast investors while still implementing a swing pricing proposal?
It's what I would say to the constituents is that we have a system right now that open-end funds and money market funds work really well for them. during normal times, but in times of stress, which we have every so often, we've had to rely on our Federal Reserve and other means to sort of support them from time to time, in the 2008 crisis, in 2020, and so forth. And so what we're trying to do is find a way that those funds are less reliant on potential extraordinary measures by our central bank. And that's really what we're trying to do. And so there's a bit of plumbing, it's a bit of infrastructure behind the scenes that when you and I think we're putting in an order by 4 o'clock Eastern time, or I guess 2 o'clock.
1 o'clock.
1 o'clock, so it's 3 hours difference, thank you. 1 o'clock Nevada time, that actually it's going to a retirement plan servicer, and then they're sending it, and we're trying to address and work.
Which adds to the complexity of what I'm raising, which
Right.
is why
And
I think it creates a
adds
bifurcated.
also to the challenge of the systemic risk issue that those fund managers may currently not know until late that evening or even the next morning what redemption requests they have.
Well, I'd like to work with you on that.
What?
I'm concerned about a
know.
two-tiered system. Let me just point out for the record.
Why do I have to go?
All three major credit
What do
rating
you mean?
agencies
This is
failed
my
to
job.
forecast the existential.
I don't gotta go anywhere.
Existential risk that both Silicon Valley Bank and Signature
That's what I do
Bank
for a living. Like,
faced.
this is exactly where I need to be. Doing exactly what I'm supposed to do
It's
for the
too
people
late,
that
in my
support me
opinion,
and love
to
me.
change ratings
There's
after
nothing else I
an
can do.
institution fails. So I hope that you would assess the performance of the rating agencies and determine what the root cause of the inaccuracies was in their ratings. I think that's very problematic and something that needs to be addressed. I know there's a lot of oversight with your agency, but this is something that should reach priority
The
at the
gentleman
SEC.
from Pennsylvania, Mr. Muser, is now recognized for 5 minutes.
Mr. Muser.
Thank you, Chairman. Chairman Gensler, I am concerned about the SEC's proposed rule on swing pricing and how it may affect retirement plans. Many people think it is a rule in search of a problem. Have you consulted with the Department of Labor to do a study about the cost of this requirement, what it add for retirement investors?
I know that we've discussed with the Department of Labor other rules, but this rule, I'd have to get back to you, sir.
Well, we would very much like to see such a study. This rule is, in fact, negatively affecting the financial future of nearly 2 million workers in Pennsylvania. So if you would, that would be great. Also, Chairman Gensler, I have grave concerns about how the SEC has handled its review, particularly high-profile S4 registration statement. I would like to start with concerns about potential conflicts of interest related to this S4 review.
Phantom
You
3L.
were the CFO of Hillary
Inverted head and
Clinton's
shoulder, 1 hour
2016
oversold.
presidential
Looks like it
campaign.
continued to the upside.
And as
Measured
campaign
move.
chairman John Podesta testified under oath in 2017.
24% more?
You were ultimately
Possible.
responsible for funding the very discredited Steele dossier. Additionally, senior SEC enforcement official Melissa Hodgman is the spouse to former FBI agent Peter Strzok and SEC General Counsel Megan Barbero has worked on 2 impeachments of the former president. However, neither you nor Ms. Hodgman nor Ms. Barbera have recused yourselves from the following. In May 2021, Digital World Acquisition Corporation, DWAC, filed a registration statement for its merger with Trump Media and Technology Group, TMTG. For nearly a year, the SEC has obstructed the merger, destroying billions, I said billions of dollars in shareholder value, and harming over 20 million individual retail investors the SEC is chartered to protect, including many of my constituents. The average processing time for an S4 form, which you well know is the last step in the merger like this, in 2022 was 134 days. Before your term as chairman, it was under 100 days. As of today, the DWAC has waited 337 days for the SEC to begin processing this form. This seems clearly out of the ordinary, correct?
The review of these forms, the merger forms, when a special purpose acquisition company is buying a company and that company is going public, are reviewed by our Division of Disclosure Review. And yes, it takes time to make sure that those filings are accurate and in compliance with the law. And we certainly had more of them in 22 than 21. You talked about the lengthening of that time.
I'm focusing on this one, 337 days. Why should my constituents not be concerned that this out of ordinary delay is caused by such conflicts of interest?
With all respect, there's no conflicts here. This is just a matter of making sure that filings with the Securities and Exchange Commission accurately have the full, fair, and truthful disclosures in those documents.
Of course. Will the SEC ever approve the DWAC-TMTG merger?
We don't have a role in approving or disapproving mergers. What we do have a role of overseeing the disclosures with regard to those mergers, and it's really just the disclosure documents review.
Okay. What concerns should my constituents have that are shareholders in this very unordinary extended review process?
I would say
They
just
shouldn't have any concerns, or they should have serious concerns, because they're losing money.
overall, again, not speaking about any one circumstance, but overall, investors benefit by robust review by this, it's about a 300-person unit that looks at these documents to see whether they're complying with the law and they're accurate. And yes, from time to time, we actually take an order. A five-member commission takes an order to investigate further. It's called an 8E order.
I'm familiar with that. I want to get to that. But stable roads, for instance, you were very familiar with, very similar, had procedural parallels to all of this, was bragged by Ms. Hodgman about incredible speed, efficiency, and creativity. It was able to move forward even while under added investigation. So what was the legal basis for refusing to process a registration statement based upon the existence of the so-called 8E examination? What's the legal basis for it?
Again, I'm not speaking about any one circumstance, but Congress gave us authority under the 1933 Act that I talked about earlier, that Sam Rayburn fathered, and to make sure that the disclosures to the public are accurate and complete.
Can this organization expect some sort of response from the SEC any time in the near future?
Again, we work with registrants to make sure that their filings are accurate and complete.
Thank you. I yield back, Chairman.
The gentlewoman from Michigan, Ms. Tlaib, is now recognized for 5 minutes.
Thank you, Chairman. Chair, thank you so much for being here. You know, climate disasters cost us money, right? Like climate disaster, does it cost the economy money? Is there an impact on the economy?
I mean, there's a lot of economic research that shows that,
Oh, it's a pretty simple
that climate risk has led to cost to the economy.
Like the disasters that a lot of my residents talk about. I mean, somebody's paying the cost to clean it up. You know, I know like in Michigan, we've had several, I think since 2020, I believe we had like 11 different climate disasters, which resulted in about $2 billion cost. So it costs money when we have these climate disasters.
There's weather events, there are other events that can occur.
You know, when you all put the rule out in regards to, and I'm going to talk about Scope 3 emissions, there was overwhelming support in the comments, correct, by investors for the proposed rule?
There's generally been strong support amongst investors. There are some that are in opposition to what so-called Scope 3 disclosures, but generally very strong support, far more mixed on the issuer side.
Actually, Chair, I read that 97% of investors supported the proposed rule of all the comments submitted. So I want to talk about what is Scope 3?
So one of the ways that investors have thought of to understand the climate risk of the companies they're investing in is their greenhouse gas emission. And then there's so-called emissions that are from the company itself, Scope 1, from the electricity they buy. And then there's this concept called Scope 3, the greenhouse gas emissions of their suppliers and their customers.
Which is really important. In European Union, don't they require some sort of disclosure around this already? About 70% of public companies in America have to report to them in regards to that. I think they call theirs, if I'm not mistaken, Corporate Sustainability Reporting Directive. But I don't, do they have like a Scope 3 emissions disclosure?
So the European Union's disclosure directive is, I believe, being finalized and going into place sometime this summer. But from public reports, yes, they would be covering.
70% of US-based public companies, correct? Would have to report.
So their regime in Europe says that if you operate in Europe, or you're listed in Europe, or you have over 150 million euro of you're
Yeah.
covered. And the Wall Street Journal recently reported that it would be about 70% of U.S. companies
Yeah.
would meet that European standard.
However, despite the importance of this, and I mean, I think folks generally outside of Congress generally are very supportive of this proposed rule. Companies, though, under Scope 3 would have to determine what they think is important to report. Is that correct? It'd be up to them.
What we proposed is only about public companies. It's not about their suppliers, but the public company would be required to
You're not worried about underreporting? Because the way the threshold is, it literally only requires disclosure of Scope 3 emissions that they themselves determine to be important. I mean, I can go into details in showing you when you say things are illegal. No one ever talks about the fact that there is a huge trend within these public companies of inside trading, of violating the law. I mean, enforcement is a different aspect, but
You're right.
I'm
that-
worried about underreporting here.
Yeah, what we proposed was that those companies that found it so-called Scope 3 was material to them, that then they would
They
have
get to
report
decide.
it.
Chairman, I'm really concerned at us allowing them to decide. I mean, just look at Silicon Valley, even, you know, and I'm so glad that Congresswoman Velasquez mentioned Section 956. I mean, you know, the fact that it's been 12 years that we don't even have this, we can't even claw back. But we know for a fact from timeline, certain companies do certain things for profit, even though it's against the law. And I just feel like very much when we allow this much kind of let them decide whether or not it's
I agree
important
with
to
her.
report.
Yeah.
I'm really concerned about underreporting regarding the emissions impact.
Oh, she.
And I just want you to go back to the rest of the commission and express the concern here. You can't allow them to self-determine what's important. I think we need
Oh,
to
man.
tell them what it is.
She wants to live in
Thank you.
a
Vote's been
communist
called on the
regime.
House floor. The chair's intention is to get through as many of these questions as possible. Then we will recess for the purposes of these two votes on the floor. I'll quickly come back. We'll restart the hearing as soon as we have bipartisan attendance and then get rolling here. Mr. Fitzgerald of Wisconsin is recognized for 5 minutes. I think we'll have time to get to Mr. Vargas next, next in the queue on the Democrat side. And then Ms. Kim, if we have time.
Thank you, Mr. Chair. I'll be quick. This was a question that Congressman Lukenmeyer had touched on earlier, and it's something that's been kind of a running theme, I think, as we've had the Fed and others come before the committee. So sustainable home ownership is obviously a mechanism for young adults to try and get into the market and build wealth. However, access to affordable home ownership, it's increasingly out of reach in many communities across the country. And so I've been trying to put this on a lot of people's radars so that they can kind of watch and hope to usher things forward. So 65% of Wisconsinites, our first-time home buyers, have used private mortgage insurance. And without the tool, based on the median income and the median home value, it would take the average Wisconsin family about 10 years to save the 20% it would take for a down payment. In January, at the end of January, the SEC reproposed a rule regarding the prohibition against conflicts of interest in the certain securitizations, which you're aware of. So the whole idea of the synthetic asset-backed securitization, I think, is what a lot of members have been focused on. So my question to you is, we feel like that the rule could be overly broad and ambiguous.
Wow, this is
and
wrong.
it could prohibit
This is
private
wrong.
mortgage insurers from procuring not only reinsurance in the capital markets, but just over the ordinary course of the U.S. regulated insurance businesses. It could tighten it too much. And I'm just wondering kind of if if you guys are in
Shout out to
tune
Jacob,
that,
man.
we are very concerned that, you know, young adults between the age of 25 and 35 are going to miss the opportunity for this first-time home ownership, and we're not sure how that's going to how we're going to recover from that.
I appreciate your raising it. It was a recent proposal, and so I haven't gotten a summary yet what's in the comment file, but in terms of this.
Thank you for the 922
I think what
likes. It's
Congress
amazing.
addressed, and-
God bless you all for doing that.
And
That's
we're
huge.
doing this because it was mandated by Congress that
Shout out to the Bruins last night.
people in the asset
Taking game one.
securitization markets, this is mortgage markets that are securitizing it, in the 08 period had some conflicts that were revealed, and Congress said we had to address
Andrew,
to ensure to make sure address those conflicts, and so we're trying to follow up on Congress's mandate that we're required to do that. But I'll certainly
So
take
trying.
that
A
back.
lot of
and
trying.
once again, I'm putting it on your radar. I think it's a running theme. It's a big concern, I think, for many members of financial services. So, but thank you for your time. I yield back.
We'll now go to Mr. Vargas of California for 5 minutes.
Thank you very much, Mr. Chair. And again, I want to thank you, and I want to thank the ranking member for convening this meeting. And I can see why you cherish the experience, Mr. Chair, of coming under 7 different chairs. And I imagine you could name them all if you were asked to do so.
I remember all these people from
No,
the...
don't look. Don't look. That's cheating. That's cheating. But anyway, I jest, of course. And again, I thank you very much. Now, I was going to go into a whole bunch of questions here.
I remember this
and
guy
praise
from
you
the,
over, because I'm the co-chair of the Congressional
I watched a
Sustainable
lot of
Investment
congressional
Caucus.
hearings the last
What
3
you're
years.
doing, I think,
Like
is
at least
fantastic.
500
Again,
hours.
I appreciate it. But you kind of dropped the bomb on us in a second there. You said something, and then you didn't give an opportunity to talk about it, and that's AI. You said, with all due, and I don't want to put words in your mouth because enough people have done that today, but you said something like AI is really what's going to be much more transformative.
Pump our AR
with all
coins.
due respect.
Let's see AGIX
to,
pump right now.
Crypto or these other things. You said something like that, and then you stopped.
I
Could you
truly-
elaborate?
I truly believe it. I think it's as transformative as the internet itself. It's going to affect all parts of our economy, whether it's radiology, whether it's driverless cars. But in finance, it's already being adopted. It's being adopted for call centers, for compliance, robo-advising, brokerage apps, something called sentiment analysis, where even this hearing right now might be being fed right into a sentiment analysis to analyze, and would the markets go up or down depending upon what the chair said. This is Chair McHenry, not this chair.
Yes.
You know, and
You'll have a picture up soon.
yeah.
Very nice.
It'll probably be life-size, actually.
So it's transformative, but it's also raises public policy issues, and one of them that we're looking at the SEC is using predictive data analytics in robo-advising and in brokerage apps. Are the applications just solely looking at the interest of the investor, or are they also looking at their own interest, and that might inherently have conflicts in the
so-
algorithms?
As liberal as I am, I'm actually conservative in the way I look at the world. When there are changes, it makes me a little nervous. So, for example,
Nervous.
when we take a look at
Worry,
risk
fear, nervous. Someone who
or
lives in fear.
insurance, and we take a look at
That
zip
person will
codes,
push fear on
other
you.
things other
Anyone who
than
lives
the
in fear will
person's
push
driving
fear onto
experience,
you. Remember that.
miles driven,
Low
all that,
frequency.
it makes me a little nervous. So when you get into AI, especially how it's going to
If you
affect
believe in
poor
God, why are you
communities,
nervous?
People of color.
God's got you,
And
baby.
that concerns me. Does that not concern you?
I think it's a big challenge because, look, I mean, right now you can sweep the data up from your automobile driving. It's called telematics. You can sweep up your social media usage and sort of, based upon that, decide how to underwrite and make a loan. There's research, actually, interesting research that shows that if you capitalize your letters for pronouns in your emails, you're better credit than if you don't. I'm giving you this away a little bit. And if you charge your phone every night, you're better credit, believe it or not. So now, what if it happens to be that people that capitalize their letters are of a certain race or ethnicity or gender, and it has nothing to do with credit, but then we're embedding something into the systems which has inherent biases. So yes, I think you're right to have that consideration.
Okay. I know that we're pressed for time, so I'm going to go ahead and yield back. And again,
Thank you. For once, someone finally yielded.
I thank my colleague. Mrs. Kim is recognized for 5 minutes.
Thank you so much. I know we're rushed with time over here, but I have to say that in my
You're not rushed.
ongoing conversations
You do what you gotta
with
do for
those
your constituents.
stakeholders in the financial industry, there are some things that they raise as concerning, and there is a theme here, and that is the frantic pace, limited comment periods, and complexity of the rules proposed by SEC under your leadership.
Shout out to 844 people here.
undermines
God
the
bless you all for being
SEC's
here.
long-established three-part mission to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. Persistent inflation is eating away the hard-earned savings of retirees, and now some of the proposals by the SEC will make it harder to save for retirement, and this is unacceptable. And so I echo Representative Horsfield's comments about the hard close rule that would force investors to put in orders to purchase or redeem funds as early as 10 a.m. Eastern Time in order to get that day's price. As a member of Congress who represent California, this is concerning because my constituents may have to place orders way before they are getting out of bed. So
They should
I
move
just
to New
wanted
York
to
City
echo
then.
that comments and share that. So do you believe
to
that
Florida.
creating second-class citizen of investor is fair for my constituents or constituents, who are asking for a level playing field?
It's actually trying to help them out and level the playing field to protect them, because it's the biggest institutions that are sometimes anticipating that the Federal Reserve will come to their support. And in times of stress, open-end bond funds have made such calls to the U.S. Federal Reserve, and that's what we're trying to address. Those
Thank you.
implicit
I know you
backing.
addressed that issue in Representative Halsford's question, so thank you. I know you're repeating that too. But let me get to the next issue. According to your SEC's Office of Advocate for Small Business Capital Formation, a woman founder's share of funding in the private markets, specifically venture capital, remains a fraction of the overall capital raised. One way to reduce this gap in funding is by incentivizing more women fund managers in the industry, something I heard in my conversation and roundtable discussions I had with them. The SEC's private funds proposal restricts site letters, and it would raise barriers to entry into private markets and disadvantage new fund managers raising their first funds. So have you assessed how moving forward with this rulemaking will inhibit new and emerging, especially women, fund managers from raising funds?
I think this rule proposal, if adopted, would really help a diverse array of investors. Those are the investors behind the pension funds that are in here, and help a diverse array of small businesses. It would potentially, frankly, lower the profits of the middle.
Yep.
That's the efficiency. Competition would
This price
drive
action is so flat.
greater efficiency in the middle of the market. The asset managers, and I would imagine they would comment to you that they might have lower potential profits, but that's going to help investors on one side and small businesses on the other side, raising money from those private funds.
Thank you. Thank you. Thank you for your comments on that. I want to make mention of the Commission's ABS conflict of interest rule. As you know, there are many Americans who can save up to 20% down payment on a home. But private mortgage insurance allows them to get into a home in a fiscally responsible manner. And it's especially critical in Orange County, where I represent, which has some of the most expensive housing stock in the industry. Whopping 72% of first-time California homeowners use private mortgage insurance. So will you ensure that private mortgage insurance can continue to utilize the capital markets for transactions that are recognized by state regulators, FHFA, and the GSEs being important tools for prudent risk and capital management in today's housing market. Obviously, I'm talking about the working class and middle class Californians that I represent. They agree that PMI, would be needed to give them the access to home ownership. I want to get your thoughts on that.
So as the discussion with Representative Fitzgerald earlier,
We're all so
I'll take
rich,
this
we
back
don't
and think
care.
about it, but we have to comply with the law passed by Congress.
What an
that
annoying trade.
addresses these conflicts in the
Up and
market.
down, up and down, up and down.
If you'll please provide that in writing.
Thank you.
Thank you, thank
Will
you.
you please provide that in writing?
Yes.
Thank you. We'll go to Mr. Green for 5 minutes, and we'll adjourn, we'll recess, so members can finish questioning.
Thank you, Mr. Chairman. I thank the ranking member as well, and Mr. Chairman Gensler. Given that we're into a countdown to default because of my Republican colleagues and their failure to permit a vote on legislation to lift or suspend the debt ceiling.
Get rid of the
so
Federal
that we
Reserve that
might,
you owe the debt
richest
to.
country in the
Who do you owe
world,
the debt
pay our
to?
bills.
Why don't you ask who you owe the debt to, man? These people don't make any sense to
The
me.
hearing should really
He probably
be
voted for
about, in
deficit
my
spending for the
opinion,
last 5 years straight.
the adverse
These
consequences
people don't make any sense to me.
of the richest.
I'm going to run for
most
president
powerful country in
2032.
the
We're going to
world
make this right. We're going to make this
failing
right.
to pay its debts
Blockchain
because
party.
of politics.
We're going to have a new party, a new way of life.
And questions to be answered.
We're going to help every single person that wants to be
What will
financially
the adverse
free.
consequences of default be on auto loans, things that impact a good many people, mortgages, the stock market? What will the adverse consequences be on our $100 trillion capital markets, the largest in the world, I might add? The adverse consequences on the dollar as a global reserve currency. And what are the likely adverse consequences on our need to attract investors to our treasuries in the event of a default? Of course, a question of paramount importance would be, what is the likelihood of a Republican recession? So, Mr. Gensler, let me ask you, please, as it relates to our global reserve currency, a default, what do you prognosticate the consequences to be on our status with our global reserve currency?
Representative, it's hard to predict because we'd be in uncharted waters, but it'd be quite
Uncharted.
disruptive. The base of our markets is U.S. Treasury, and you would envision that there'd be more risk in that market, less liquidity, and that it would cost more as taxpayers to raise money. In terms of the U.S. dollar, how it probably would be in more volatile times, but what would happen to its rates is hard to predict. But in terms of homeowners and the capital markets, we'd be in for a lot of volatility, and we would take a hit in terms of future investors thinking about our capital markets in the same way. They'd have to price in the risk of this instability potentially happening again.
This is a good segue into the question with reference to the adverse consequences on the need to attract investors to our treasuries. Our treasuries are considered the best in the world. People believe that their money is secure when it's in an American treasury. What would be the consequences?
Again, it's hard to predict, but it'd be quite disruptive, quite volatile, and uncertain.
I thank you for your commentary and would close with this. It seems to me that we should understand the importance of suspending or lifting the debt ceiling such that we don't get into these uncharted waters. Because
when are you going to stop lifting the debt ceiling? When does it end? When does it end? Till the dollar goes to zero? You're going to have to print so much money.
The adverse
Don't they get what's going on? It's like listening to
something that can last for a moment. And I'm using a moment in a rather loose way.
Not
because
making
it
any
could be
sense.
Much longer, obviously, than a moment.
Not making any sense to me.
And I would hope that as you make your commentary to persons in these meetings that you have with them, that you would let them understand to a greater extent than we might share in the public our position with the reserve currency and the impact. There is a war for currency supremacy, and currently we're winning, but we don't have to have this esteemed position forever. It can change. Your final comment.
We're not winning.
I think
What are
you're
you talking about?
correct, and it's what I was trying to say to, I think it was Representative Timmons earlier. Part of our agenda is trying to ensure that our capital markets stay the most efficient, most resilient, and fair, so that we stay the destination of choice.
Thank you, Mr. Chairman.
We will now reconvene immediately following votes. The committee stands in recess.
All right. They're going to come back, but we're done for the day. I can, but I don't like using that word. But, I mean, we did it, everyone. You guys kicked it with me. I'm on a stand-up desk. That has been 4 hours of live streaming straight. All right? I'm also fasting today, not drinking water or eating anything. This is awesome. Here's something in the background. I'm trying to think which one it was. I did have this running in the background ever so lightly, but I can't find which one it is. Is it Restream? That must be Restream, right? What does that mean? I never heard of that in my life, babe. Trying to find out where that's coming from. I can't. Anyway, I'm just going to go over what's going on right now with Bitcoin. We're going to break it down. We're going to show you some of the trades that we're looking at. So look, Bitcoin's still in the 7. If you look at it, it was in this falling wedge, right? It broke out, and now it's attempting to hold above the zone, right? And the 7-minute has reset. There's a chance we could continue to pump here. I'm staying in the trade. We go back inside here, fine. We'll go back to the bottom of the pattern. But I'm staying inside the trade for now, all right? Staying inside the trade for now. And it's a bit of a cup and handle. There's your cup, there's your handle. 15 minutes still just waiting for a pump here. Oversold, but eventually will come back to the upside. Also, the 15-minute showing signs of a hidden bullish divergence as this swings down and this swings to the upside. We could see a substantial move all the way. All right, Super Chats, DENT, LCX, Phantom 3L, and MATIC. Well, I went over LCX real quick, lattice token. And I saw it in a bit of a flag here, right? LCX on Coinbase. Let's see. No, it's not lattice token, right? Yeah, it's what LCX is out like Luxembourg or something, right? I see it in this flag here. You can see here, it has not hit the stop loss, just still exactly where it was, a little lower than entry, of course, but never hit the stop loss, still watching it. You got to look at your daily time frame, really. It's the daily idea. The daily is getting to the oversold regions. It may bounce here at this point of control. It may get lower, and you never know. It could get stopped out. Only time will tell, right? Nobody wins every single trade. If they did, they'd be a liar. No one is 100%, right? So there's a chance that this trade does not play out every single time. Because you have to be open-minded enough to believe that nobody is 100%, then anytime I show a trade or go over something, and I'm not a financial advisor, and that guy's saying you should be taking his financial advice, but anytime I go over something or look at something, you must come to the conclusion on your own that there's no guarantees that the trade will play to the upside, right? A lot of people see me and like, oh, this guy looks great. He's got, he wears the suits. He's always here online. He does it every single day. Everything he says happens. He is like, everything he says happens. Oh, I was playing a Twitter feed back over and over again. There was I was running a feed in the background of thank you, Frankie. Basically of him putting the panda bear on my back. Pretty insane. Anyway, so Bitcoin, LCX could still continue to move. I would draw a Fibonacci on that to see kind of how low you're going. And if you can get held by the 706 fib, you're about to hit the 786 and a point of control. will be an interesting place. Slower liquidity on this coin too, but it is on Coinbase, something to think about. Phantom 3L already went over for you. If you saw me do it, I did it right after you sent it in. I went over it, real quick, and I even said it real quick. So I technically did Phantom 3L. Hope the person who was asking looked at it. I saw this as an inverted head and shoulder, bit of a cup and handle, retesting this same area here as a previous resistance right there at 77. It's at 7.5. The measured move would take you all the way up to about almost 10 cents on the Phantom 3L, right? I don't drink, and I don't want you to. There's some young kids that watch my stream, so we're going to remove your comment and put you on timeout for a second, okay? God bless you, though. I appreciate you. And, I used to drink, too, so I get it. Theta and Hex, damn, already a change.org petition with 35,000 signatures. Yep. Can you do EGLD, please? I see a potential rise. If you send in a super chat, I could. I'm home for the dentist appointment, and my big screen shattered on the floor. My laptop and everything that wasn't in the cabinet. Puppies are you kidding me? Dude, I mean, you got to keep things in place. That's your fault, man. Like, you can't blame your dogs on breaking your stuff. Your stuff should have been in a locked room or in a way where your dog couldn't have broken it. I get you might be in tight corners, but you got to blame yourself for anything that happens like that. You know what I mean? You can't blame the dogs. Also, they could have been hurt. So just, just be happy that the dogs aren't hurt, even though they broke your stuff. That's how I would look at it. But again, it is what it is, right? Look at Dent. Dent's interesting. It's forming this, a symmetrical triangle. We know symmetrical triangles break up or down depending the length of the pole. It all depends on where you're looking at on the daily time frame. If you're also in the daily, there's a chance this could pump. Daily's a little spent. This may come back down for, it may be a little more extended, may come down a little bit more here. So I'd be looking for the daily to reset down to this area, getting tight of the channel, and then we could get all the way back up to 01764. I think there's some better trades out there per se, but and it's even got kind of like a shoulder ahead and a right shoulder there. It is above a high volume node on the daily time frame. If it can stay above this red line, we could easily gap up to this area. That would be your next, what is called high volume node. You have really no liquidity on Dent right now. So if it did start to move, it would stream all the way up here to where people are about to sell, and they would be looking at it, right? My phone is straight. Right. Thank you. Does it seem like the prices go up slightly when a Republican is out and now go down? Yeah. How do you see is winning? You literally just recently took the biggest hits to being the reserve, right? I don't understand what he was saying. We're winning? I'm like, what do you mean you're winning? The dollar looks like it's about to tank. And wow, now they're banging on it to the low side now. This has been an insane day of just constant look. Now they got long liquidations, short liquidations. Really didn't get a lot of answers, a lot of clarity. I think that kind of, pushes people a little bit here. Interesting. Trade has been backwards, all up and down. Feels like a Monday, false move Monday and such. Although 30K is still holding. I just want to thank you for sharing all your amazing skills, positive vibes, and for passing on the life or vision. Bless you and everybody around. All I suggest is that you stay loyal. You remember who your mentor was. You know what I mean? And and you just help my community grow the best it can. That's the best thing you could do for me. Trevor TVA, Life33. Thank you so much for the love, man. Panda. Yep. What do you know about DYP? We traded it on and off. I just want to thank you for sharing. Thank you for saying that. Sam, go rest and kiss your wife, please. You do so much. I don't want you to burn out. We need more like you, and people need a break. Take one, brother. Shout out to Golden God. God bless you. Exactly. My son was mad. He left the eggs on the table, and the pup ate it. I said, she's a dog. Dog gonna eat it. Yeah, you got to blame yourself for whatever your dog does. Like, got your Theta stream key ready, bro. Just email me tonight when you have time. Theta and Hex, thank you so much for the love, man. I appreciate that. We were waiting for 2 years, man, or a year and a half. My team was like, what's happening with the Theta stream? We did get an email from Theta today. Finally, it looks like we'll be ready to go. You're the dude? You're the Theta guy? Yeah, so Theta stream key. There you go. Yep. He will be on today, so we're all set. I will contact you as soon as he is. He usually streams from 5 to 8. The lifer is too busy today, so we can do it another day. I can directly give you Arca's Twitter schedule, something. Awesome. I'll email you today as soon as I get in contact with Arc and find out what time he streams. I finally obtained an extra stream key for the lifer. If you would like to still stream on Theta alongside with YouTube. I know he was interested before, but I was having a hard time getting it. I apologize for taking such a long time. I already discussed it with them and have a stream key ready. Just let me know. Thank you so much, man. God bless you for doing that. We were attempting to get that stream key for a long, long time now. So thank you so much for the love. Appreciate that. And I'm now stopped out at 30,050. It is what it is after all the shenanigans. Hey, $40 loss on the call. I just want to thank you for sharing all your amazing skills. Yep. One of the most boring trades I was ever in, MATIC 8-hour flag, and DENT, LCS, and Phantom, MATIC 8-hour flag, and then I'm out of here for the day, and I'll be in the trading group with everybody just doing what we do. I see MATIC just making this giant consolidation here, only a matter of time. As long as it keeps making these higher lows, MATIC is starting to make a move. It will follow Bitcoin, Ethereum, whatever Ethereum really does. 8-hour is kind of making a flag. I don't know about an 8-hour flag, though. Like, I don't see a flag on the 8-hour. A flag would be up to the side. It's in consolidation, right? Measured move for MATIC does take us far, though, back to $3.46. Is that, anything could happen. We had a pretty good pump there, too. So as long as Bitcoin can hold its own, and the Ethereum will get some movement, and we could see a bigger blast up on MATIC. But no guarantees, one day at a time. I looked at this coin, NWC, and we talked about it, and it did get the nice move to the upside. News Crypto jumped into that little zone and then got the move to the upside. This thing boomed up about 29% gains. NWC, I was looking at it last night before I went to bed, just something I was looking at, NWC. My team, thank you so much for the memes. Thank you so much for the love. Thank you so much for supporting me as I work tirelessly to achieve our goals, to keep everybody well-fed and hungry. That is hungry, you know what I mean? Shout out to everybody here on the live. Thank you for being here. We'll feed you with these charts. We'll feed you with the news. And we appreciate you all for being here, all right? It means the world to me. I was seeing $1 million, a channel that had 1 million people. It was the Yahoo Finance. They had 3,500. We had about 1,100. We were 1 quarter away. We have 40,000 subs. They have 1 million subs on Yahoo Finance. So we were battling Yahoo Finance. That was a huge thing that we were able to achieve such retention. And I really, really appreciate each and every one of you for being here. 717 people still, 974 likes. The stream has 6,000 views and counting, continuing to bump to the upside. I'm super excited for the move. CTSI has been hot too. It's been hot. Super had a big pump out of nowhere, right? And there's still some nice coins up only. Wish I had seen the symmetrical triangle before it pumped. Just nice little move to the upside for up only. But you can't get them all, all right? It is what it is. And look, even this spiked. I was looking at this. It was likelihood this was going to make a move. It went up 30% in total. And that is, FTX. I was looking at it last night at the 618. Likely it was going to get a bounce. It did. So we hit a bunch of gains in the trading group already, things that I was looking at last night. So I work tirelessly in the night, tirelessly in the day. I don't stop. I love each and every one of you, and I'll be back. I teach class at 3 o'clock today, so we're going to break that down for you. I'm going to go outside, raise my eyes, meditate, and relax for a second, and then I'm going to teach some class. So shout out to everybody here on the live. Thank you for being here with me. I appreciate you all for making the time, sharing your most precious asset with me, and that is your time. FTT for gains as well, all right? And still holding some gains, about 12 or 20%, 15%. I'd have to check to verify. I don't want to misspeak here. Let's just bring this down. That candle closes still holding about a gain of about, 13.38% with a total of about 29 on the move. WeMix was also up only, right? We saw that. Gamify, GameBee, Avalanche. DSLA, one of my favorite coins, still really high compared to where it was, right? We had it down here, hit the target, came back down. We're going to rework that pattern, see what goes on with DSLA. It's on my radar, right? And last thing I want to look at is AGIX, my baby. Is it staying above 40 cents? It's really all I want. The second it goes below 40 cents, I am buying. Again, I'm not a financial advisor. Nothing I say and do should be taken as financial advice. Please get yourself a financial advisor and do your own due diligence before getting into any project, coin, or trade. Yeah, a bit of a flag there for AGIX, kind of broadening falling wedge that could take us to the top of this channel. But you can see we're just bullishly consolidating here, tighter and tighter, until a huge move comes. I believe there is a giant move coming for AGIX. It's only a matter of time. Some AI stuff will come out, and this thing could just continue to moon. Daily does need a reset, but the 3-day chart suggests that a big move could be coming on the bigger time frames. Shout out to everybody that commented, everyone that was here in the comments, everyone that ran on in. We appreciate you. Nice to follow your stream while I trade. Yep, thank you for all you do. Have a great day, fam. I'm off to teach yoga. That's such a good, awesome thing. Real Housewife of Crypto. God bless you. I love that name, too. You know what I mean? Don't get us excited. Housewives everyone gets get a little excited. I don't know what it is about it, but, all those reality TV shows, a woman mentions she's a housewife, and all the guys just perk up a little bit. They're like, whoa, what did she say? Thank you 1,000 times for your generosity and kindness. The light worker in your soul is well developed, and I'm grateful to be in your presence. I will see you in class. Hey, God bless you, man. Thank you for that. I'm working to elevate myself to a higher level of learning, life, and happiness. And you know what? It really does pay off. I'm going after a legacy because you can't take the things that you have when you leave this earth. There's just no way. There's no way. Still holding 30,000, but barely for Bitcoin. And I already just showed you it's all about this 7-minute flag here. Slight inverted head and shoulder, too, that could still propel us to the, well, we got the dump right there, right back inside the pattern. You didn't want to see that, kind of, you know, and there you have it. Just kind of low liquidity today. I don't know what's happening. I'm going to have to rework the pattern and see what's going on. I'll just kind of do this for you real quick. So Bitcoin, you know, hit your levels of support and resistance on the daily just to see what's going on, all right? And the daily is resetting, you know, still coming on down, but the 22-hour, which is my go-to, says, no, we're about to bounce. So I'd look for this to have a nice move later on today. That's a beautiful flag on the 22-hour time frame. That could really propel us to the upside. Stop loss could be here because we know this is our previous idea. And then remember, never forget this this thing that we've been doing here, which was this diagonal trend line that I keep saying as long as we stay above, we're okay. And then, and then this top trend line here, which is a symmetrical triangle or ascending triangle. Now, this is a flag, right? And this flag could pump you all the way to 33,350. And again, back to my idea that we were going to hit this yellow line on the 3-day chart. Come on, baby. Hit my yellow line so I can say it happened. We can go from there, and we can talk about it afterwards. But everybody, thank you so much for being here. Please comment, like, and subscribe. When I started the day, I said, you know, we're going to wait for the 1-hour time frame to kiss the 21-day moving average. Hold on one second. What's going on here? Hold on. That's not how I looked at it earlier this morning, right? That's something's oh yeah, the 1 hour is resetting. This is what I was doing. I get it, remember. We broke out of this. This is what we had. We had this falling wedge, right? We broke out, and then I basically said, you know, I wouldn't trade this until the 1 hour makes a flag and kisses the 21-day moving average. The second that happens, I believe we're going to get the move to the upside, beautiful entry, and that is a bit of a cup and handle. I was attempting to scalp smaller time frames, but I was very, very chintzy. And I always use a stop loss, and I don't risk a lot of money. So I like what we're seeing here. This cup and handle could take us to 31,278, and that is on the radar here. I want to see this 21 touch. I do not want to see price action break this diagonal trend line. If we break back inside this diagonal trend line, we're coming down to the bottom of it. That's just how patterns work. As long as we stay outside of this pattern, we can squiggle wiggle and get our move back to the upside. That target would be 31,339. Everybody, have a great day. Thank you so much for being here. Please comment, like, and subscribe, and I'll see you on the next live stream. Thank you for sharing your most precious asset with me. And may God bless each and every one of you. And yeah, happy Ramadan if you're doing that. You know, 3 more days and you'll be able to celebrate Eid and have a wonderful, wonderful time with you, your family, and all who celebrated. So everyone, thank you for the comments. Thank you for being here. Amazing stream, one of the longest streams I've ever done, 4-hour live stream. And I'll see you in the trading group. And I'll see you if you took class in about an hour from 3 to 5:30. May God bless each and every one of you. May you have a wonderful time, a wonderful life. And I'll leave you with no eat, no pay. And then I'll jump on out of here for the day. Thank you so much for everything. God bless you all. Six more people hit that like button. 6 more people hit that like button. Let's get to 1,000 likes. Like my man said, before I jump out of here, it would be the nicest thing you could do. Karmatic energy right back to you. If you could hold me down. Let's go to 1,000 likes. Let's do it. I'll refresh the page. Maybe it already is there. I believe you did it already. I just have so much faith in my lifers. 998, come on out. 2 people got to hit that like button. 2 people. There's got to be someone out there that has a finger on the way. 1,003, we love you. Thank you so much. May God bless each and every one of you. Watch an ad for me. Why not? At the end of this.